to come this side, so it will be more nice. Too far away. That's like Pakistan, Bangladesh, Sri Lanka. Testing the mic. Yeah, recording start. Okay. Yeah, fine. All right, guys, day two of our DT classes, and the agenda is pretty simple. Every day we turn up here and we show up here early in the morning. It's almost dark when we enter, and there's light when we go back. Literally, that's a nice thing. So there are two things you need to check. Are you learning DT well? That means every time you come here, are you learning something from an exam perspective well? That and if there are any doubts, have they been answered? Those are two things that you should keep in mind whenever you come to class, because at CA Final DT, it's more about a discussion-based study than just me teaching you and you just understanding that. Yes, and whatever has happened in articleship life, you can apply it here. Whatever cases you've seen, if you are in tax, if you're in audit, no problem. But if you're in tax and if there are any cases that you relate to and you want to discuss those as well, happy to have that kind of discussion. So today, what are we going to be up to? Let's set the agenda for the session very clear. We are going to revise what happened yesterday for the first 5 minutes. Then we will start up a new chapter. The new chapter is interesting. It's the second chapter of your ICM material. I'm also taking it up in the same manner. So we are doing the second chapter today. We'll first understand the chapter completely. Once we're done with it, we'll take written notes so that in future we can revise it. Also, once we're done with any chapter, we make a 5 minute small, very crisp revision video and we keep it ready. So that not on the 5th of February, but on the 5th of May or the 5th of November, if you want to recap it, you don't have to wonder what to do. Just play that video. Yes. So the first chapter, we'll make a small video. And again, yesterday we did 3 case laws. Today, again, we'll top it up and we'll try and see if we can do 4 case laws today. Yes. So, and we'll also revisit yesterday's case laws and then we'll add 4. So that's how the agenda is for today. Very nice. We'll have a nice session. We'll take a break of 10-15 minutes in the middle and then we have another session and we'll end the session, the entire total session about 9:30. All right. So on the screen, we are looking at direct tax, and in direct tax, we are looking at the part where which says ICI material, the first chapter which we were done, which is which concept, guys? Basic concepts. There is one thing that I want to teach you from this concept, otherwise it's all done. Let's quickly recap in the exam. Which act will you quote, guys? 61. And which rules will you quote whenever you quote any rules? 1962. Guys, at CA Inter, it was only an individual, but now the assessees have become many different. CA Final, there's an individual also, there's a HUF also, there is a partnership firm, LLP also, there is a AOP, BOI also, there is a AJP also, and there are companies also, company being the main person. What is artificial juridical person? Can you give me two examples? Trusts, local authorities are all artificial juridical persons. And each of these persons, can they have income? Yes. And who will pay the taxes, guys? They will pay their own taxes. You know, from residential status to the 5 heads of income to clubbing set off, you will follow all the steps for all the persons. Yes. Guys, even if it's a cooperative society, how many heads of income? 5. Even if it's a company, how many heads of income? 5. And even if it's you and me, how many heads of income, guys? 5. But that first head of income, which is the first head of income, that's pretty personal because salary only a individual can have. Yes. So, but otherwise, all 5 heads of income apply everywhere. And then we reach the stage of total income on which you calculate tax. Yes. There are two kinds of companies. One is a widely held company, one is a closely held company. Do we know the difference between the two? Yes. Closely held company, we don't know, but we know the definition of widely held company. Government mutually listed 25 non-cooperative. This is what we do every time we want to recap. One day prior, we recap so that it goes better in our mind. So, any company which is owned by the at least how much percent? 40%. Any company which is a mutual benefit finance companies or Nidhi companies. Next, mutually listed companies. Next, Section 25 companies which are basically non for profit and no share capital, and last, companies which are owned by cooperative society. These are widely held companies, and then there are closely. Why is the difference? Because there are some tax laws which apply only to closely held companies. Closely held companies means, is it private companies? Yes. So hence they can be manipulated easily. There are some more laws on it. When we move ahead, we'll see those laws as well. Then we saw different states, different steps to tax. Then we saw that case laws are applicable to our exams, and we discussed three case laws. Let's recap those three case laws, guys. First, as Saurashtra Cement. Cement is liquid. That guy wanted to purchase a machine, yes, and that machine was a due date of purchasing the machine. That person had to supply the machine by a particular date. Let's take the example of the machine is 5 crore rupees. The guy delayed the supply of machine and had to pay some liquidated damages. Which damages, guys? Liquidated damage. Now let's say the damage was 10 lakh rupees. Is this a capital receipt or is that a revenue receipt? So the government, the court said that it's a capital receipt. So that 10 lakh rupees will be adjusted in the cost. So the cost was how many crores? 5. But now it will become how many crores, guys? 4.9. That is one. So, and the second one, anyone remembers, guys? Yes. There was a Mahale Anand filter system. Yes. He filtered the deposit, if you remember. Had he given some security deposit? Yes. That security deposit, because of a dispute, got forfeited, cancelled. Yes. You gave a customer 5 crore rupees for some transaction or some supplier 5 crore rupees, and that deposit is getting forfeited. It is a revenue expense or a capital expense, guys? Capital expense. Guys, what is the general rule? There is no fixed rule of capital and revenue expense. But generally, revenue expenses for a particular year and capital expenses are long period of time. And guys, are Honda cars technical? Yes. So Honda CL cars, that is a case law in India. They wanted to have an agreement with Honda Japan, and they entered into a technical fee that had to be paid. Now, if that technical fee is never paid, guys, that agreement only won't happen. So that is also again capital expense or revenue expense. Okay? Capital expense. So those three case laws we did yesterday. We'll top it up with four today, and that's how we'll move ahead. Just one small change I'm going to do in handwritten notes, guys. Saurashtra Cement, we had said that amount paid. It's not amount paid, guys. It's amount received. Just change that to amount received. Where do you find all these case laws, guys? Where am I getting all these case laws from? Yes, guys, ICI material. That's all. ICI material at the end of every chapter has certain case laws, and I'm taking those case laws and putting them here. All right, so we've just quickly revised basic concepts. Guys, which is your previous year? 24-25. Which is your assessment year? When I say yours, means yours in the exam. In the exam, it will be 24-25, AY 25-26, guys. And can there be some income which are taxed in the previous year itself? Yes. Ships eventually leave, avoiding danger. All right, guys. So this was a little concept on basic concepts. Then we talk about some rates of tax. Individuals are taxed on flat rates or slab rates. Slab rates. And guys, do we get a higher basic exemption limit also? Yes. Do we get rebate also? Yes. Rebate is at what stage? BR. Guys, that's a shortcut. BR. After basic tax, you will calculate what, guys? Rebate. Rebate is for a person earning how many, up to how many lakhs, guys? 5. What if I earn 5 lakh 5,000? Will I get rebate? No. Then there is surcharge and then there is HEs. Now we have two options, guys. Two individuals in HO have two options. We have Zomato also and we have Swiggy also. We can choose. We are now at the old one. Once we finish PGBP, guys, all the new ones will start. Yes. Till PGBP starts or PGBP is understood, I cannot go to the new schemes right now. But let's strengthen our old schemes till then. Next, guys, HUF, AOP, BOI, AJP. They are also taxed in the same way, slab rates, guys. Do they get rebate? Only who is pampered, guys, in India? Individuals. Only individuals are pampered. Guys, very recently the budget 12 lakh limit. Who is that for? Individuals. Whom are they trying to make happy, guys? Individuals. Yes, all right. We move to the next one. Partnership firms. Slab or flat? Flat rate. What rate, guys? 30%. Surcharge is 12%. Only one surcharge. Very simple. Companies. 30%. Foreign companies. 40%. If they have higher rates, low surcharge. Surcharge is only 2% and 5%. Domestic companies 2 plus 5, 7 and 12%. And HEC is a common friend, constant friend, guys. Always remains what, guys? 4%. Now, guys, some of them have gotten new schemes. Example, individuals HUF. Do we have a new scheme? Yes. Same way, companies also have a new scheme and cooperatives also have a new scheme. But for my limitation is that PGBP has to be done before I can issue the new schemes. But we'll keep adding these, and rates of tax is something that we'll do every day. Like today is also the chapter, some more rates of tax we will add. So we'll move ahead like that. Yes. So today's agenda is a chapter which is a happiest chapter of our book, guys, because it is called exempt income. Which income, guys? Exempt. There are many exempt incomes, and there are many shortcuts to remember exempt incomes. So we'll remember these exempt incomes. So this is a whole chapter around it. We'll do some rates of tax. which are related to exempt incomes, we'll do that. And then we will do 3 case laws or 4 case laws. And that's how our session looks like today. Yes. So this is what I'm looking forward to today. Anything else that, okay, perfect. And this is also happens to be the second chapter of ICA material. Yes, I also wanted to take you through an exam paper. Yes. Yesterday I told you the portion or the schedule of the paper. Today we have a look at the paper so we know how to direct our energies, guys. Guys, totally how many questions you need to answer in the paper, guys? 5. Yes. Each question is for 14 marks. You have to answer 5 questions and they'll give you how many questions? 6. So our choice is good in life. Yes. And we have a choice here as well. But the first question is compulsory. And among the remaining 5, you have to do any 4. Just so that you have an eye on the exam, guys. I'm going to show you one paper. We'll just have a look at one paper here. Here we go. And in this one paper, guys, we'll see how it works and how a person who was giving the May 24 exam, guys, 1 year before, was looking at this paper. Let's start, guys. Everyone, just 5 minutes of warm up, and we see this paper, and then we move ahead. All right, guys. This is part 2. What do you mean by part 2? Where is part 1? MCQs. All right, guys. This is the first question, guys. Can you see an Indian company? Yes, you will always and always see an Indian company. Are we clear? So mentally prepared, guys. Whether you're giving your May exam on November, the first question is on who? Company. And at the end, guys, there will be many adjustments. Don't worry about them. We'll tackle all of these adjustments. At the end, the common line, compute what? Total income. And then compute what, guys? Income tax. So, guys, rates of tax for companies, are you going to apply every time in question number 1? Assuming a company has not opted for which provision? Special. So, basically, they're saying which scheme? Old scheme. Guys, special provision not applicable. So, this is basically the old scheme. So, this is question number 1. This is mainly from a chapter called PGBP. So when we reach PGBP, after that we'll actually do this sum also. In fact, this sum will also be there in your books as well. All right. Now we move ahead. We go to the second question. First question, completely practical, guys. Yes. Next, this is question number 2. Guys, now is this optional? If you like this question, you do it. If you don't like, you don't do it. But guys, starting questions are all practical. So I would suggest, highly suggest to do these questions. The latter question, the last, second last question are more theory. All right. Here, guys, there is a lady called Seema Agarwal. How many marks this question is for, guys? 4 marks. And this is from which chapter? Capital gain. She sold some asset, etc. When we reach this stage, we'll do this capital gain sum as well. All right. Just showing you where all the chapters come from. There is a person called Manju Menon next. Guys, this is again for 4 marks. And which is this chapter, guys? I have 4. So each of the papers I've highlighted where the chapter comes from. So every paper you see, I'll share. I've shared the Google Drive link, right, with you. And I'll keep adding more stuff to the Google Drive. I'll add the quick book also. I'll add stuff as and when they're ready. Next, there's a company called Miles. And here, guys, this is from a chapter called NR taxation. Again, how many marks, guys? 6. 6 plus 4 plus 4, totally 14 marks. Every question is for how many marks, guys? 14. All right, I would definitely do this question because it is fairly simple and very practical. So this is done. IFOS, NR taxation, PGBB check. Next, guys, question number 3 is generally reserved to test you on your trust knowledge. Guys, which knowledge? Trust. In India, Tirupati Trust, so many NGOs exist. How are they taxed or not taxed? Is here. So question number 3A is on trust and B is also on trust. So totally how many marks are trust, guys? 8 marks. So company 14 marks and trust 8 marks. That's a usual thing. So out of 70 marks, 22 marks are reserved for these two questions at least. Yes. Again, very practical and very nice question. And then there is a question. This is called double taxation relief. This chapter, guys, is called double taxation relief. Guys, double taxation relief, NR taxation is from the international tax. They don't have separate papers. In the same paper, they'll put, but they'll dedicate some chapters only and only some marks for international tax. Again, guys, I would definitely do this sum because once we finish trust and DTR, you yourself will be confident of these sums. We move ahead to the next question. This is question number 4. This is on TDS. At CA Inter, I don't know if you remember, guys, TDS and TCS was an important chapter. And so is here. TDS, TCS, Advanced Tax always and always forms part of your paper somewhere or the other. So this is a dedicated place. So question number 4. And here, guys, how many marks? 2 marks, 3 marks, and 3 marks. So that's how many marks totally, guys? 8 marks from a chapter called TDS. Everyone okay? And then there is transfer pricing. Transfer pricing again is with part of the paper. International tax. So they've mixed it up between international tax and trade tax, but international tax dedicatedly also has some terms like this one on transfer pricing. Yes. Aren't we discussing? No, there's no point. But once we finish transfer pricing, definitely you'll finish this one. Once we finish a chapter capital gains, we will finish that sum as well. And that's another sum. Again, honestly, guys, I would do question number 1 first compulsory. And between question number 2, 3, and 4, I would do 2, 3, and 4 because they're practical also and they're easy to do as well. Now, I want to actually show you this question number 5. Watch. Answer me 2 out of the following 3 subparts. That is 1, 2, and 3. So, how many questions have they given in A? 3. And you have to do any 2. Guys, everyone, all the statues, guys, please be a part of it. Yes, everyone. So, every time I feel there's someone who's not giving 100%, there's a one dialogue I've heard of Ranveer Singh. So Ranveer Singh was acting in a movie and Akshay Kumar told him, listen, you have so much energy, yaar. Listen, why do you have so much energy and how do you put so much energy? He's like, it's simple. If I don't use my energy here, then what am I going to do about it? Yes, so same way, guys, you guys have come to a class which is so important for you. If you don't use your energy here, what are you going to do with it? Yes, so please use all your energies here and reply. So out of how many questions, guys? 3. We have to answer how many questions, guys? 2. So issue involved, provision and analysis, and this is basically a case law. And how many marks, guys? 4. In the light of a latest Supreme Court ruling discussed with the contention of revenues. So basically, they're giving you the case and then they're telling you which case law to apply to it. So that is what you decide. But guys, see the case law which has been asked you. See the answer. Guys, this is case law Air India of which year, guys? 2023. In a paper which is which year? 2024. So remember, guys, the recent case laws have very, very high importance as compared to the very old case. Are we okay? I wanted to show you this so that you understand the importance of what we are trying to do. Next, there's again issue involved provisions and analysis. And again, guys, check this. This is Tony Electronics Limited, which year, guys? 2010. So this is an old case law. That was a new case law. Even our case law, the Honda seal is the old case law. Yes, the other one probably is a newer case law. And see this last one, the third one, guys. Again, this is which company? US Technologies International Limited, which year, guys? 2023. So a lot of the new case laws come up as questions here, and hence we should be prepared that we'll do case laws well. Now, guys, when we aim for 100, guys, we'll end up at 80. That's the reason when we aim on first day that we'll remember all the case laws, we'll at least remember 70% of it, and that's a great thing. But if we don't, we think, oh no, we'll do it later, guys, it will not happen. So from day one, we'll start with 3 every day, 34 case laws. And I wanted to show you the importance of why these case laws are important. All right. And as we move ahead, this is question number 5. This question number 6. This question number 6 is slightly theoretical. So if you mentally, guys, can avoid question number 6 and try and finish your paper in the first 5 questions only, it will be a great thing. Otherwise, also this is okay. There is a chapter called Unethical Tax Practices. This question is from there, and Advanced Ruling. This question is from there. Ending it, May 24 seemed like a very simple paper. Once we finish chapters, you'll see it, and it's a very manageable paper that came in. And as and when we move ahead, we'll be doing exam questions as well. All right. So here we go. Spend 5 minutes discussing a paper because I wanted to show you that. And now we move to a new chapter, which is called Exempt. All right. New chapter. Nothing to write as of now. Guys. Put your pen down, relax, sit back, and try and understand something that probably will be new to you. And if you've seen a little bit of it or heard a little bit of it, great. But try and finish it with me, guys, in class itself. Yes. All right. Guys, this chapter, which is the second chapter of our ICI material, is called Exempt income. So, are there incomes? Everyone. What is the golden rule? If there is income, there will be tax. But this is an exception to it, guys. This exempt income, which is only and only a dedicated section called Section 10, says that you will have incomes, but for some reason, I will not want to tax it. As and when I teach you, I will also tell you why they're not being taxed. Not just they're not taxed, I'll also tell you the logic of why they're not being taxed. Yes. So this is Section 10. But whenever I speak about exemption, guys, I'm remembered about a discussion or a distinction between exemption and deduction. Guys, can you tell me the difference between an exemption and a deduction? Income, and then you get it minus. Yes. And what about exemption? Yes. But how I remember it, E for exempt, E for exclude. That means exemption is completely excluded from my income only. It doesn't come in my calculation only. It's someone who doesn't enter this class, guys, goes out. And deductions, guys, the income first comes in and then you get a deduction. Are we getting the difference, guys? Yes. But guys, both actually for us means happiness because exemption and deduction both basically reduce our tax. Everyone okay with this? So our discussion today is only and only going to be exemptions and we're doing one deduction. You'll know which deduction we'll be doing. So this is how our exemptions and deduction move. Guys, the biggest exemption is given for the first one is on AI, guys. AI, artificial intelligence. Agriculture income. So the first big exemption is given on agriculture income. You have a little background on it. So I'm going to talk about it, and as in when we move ahead, you'll see that some of it you already know, some is new. Guys, in India, agriculture income, the government says, is completely exempt under a section called Section 10(1). So the first exemption is given for what, guys? Agriculture. Every year, closer to the budget, a lot of people say agriculture, rich agriculture should be taxed. Never. Guys, in India, agriculture is really big in India, and people don't want to tax that. Government, no one wants to bell that cat. So for many, many years now, agriculture income has been completely exempt. Now, what is agriculture income, guys? Recent RTP question. There is a person who's growing mulberry leaves. Guys, question. Person growing which leaves? And he's selling those mulberry leaves. Is that agriculture? Think about it. Growing potatoes? Yes, simple. Growing green vegetables? Yes. Wheat? Yes. Mulberry leaves? Yes. Guys, agriculture basically means anything that is grown and sold. Anything which is grown and sold. So including mulberry leaves? Yes. Guys, forest produce? No, because you've not grown it. Are we getting the difference, guys? Yes. So a tree is already there. You're cutting the tree. Timber. Sale of timber. No, because you've not grown and sold it. Are we okay with this, guys? So anything which you cultivate and you sell, guys, is part of agriculture. Yes. Then no. It takes a lot of years. A tree, a timber which is sold is basically a many years old. Yes. Saplings exempt income. No, timber has been completely taxed. Is taxed. Yes. And generally, it takes many years for a tree to develop enough wood that you cut it and you sell it. Yes. So yeah, but timber is completely taxable. Yes. So agriculture income, guys. Basically, we'll have a discussion in two parts. One is called rural agriculture land. Which land, guys? Rural agriculture land. So let's start, guys. Very quickly. You will tell me if I ask you some question. Is this agriculture income or not? First, guys, I'm growing and selling agricultural produce. Is that exempt? Yes. Can you give me some examples, guys? What do we grow? Wheat? Can we grow wheat? Yes. Can we grow pulses? Can we grow fruits and vegetables? Anything that is grown and sold. Reliance Fresh. They're buying and selling. No, that's not agriculture. That is business. Everyone okay? So activity of growing and selling agricultural produce, is that exempt? Yes. Second, guys, what if I'm very busy, I can't do agriculture? Can I rent out my agriculture land? Yes. For what purpose? Agriculture. Only for agriculture, only then it will be completely exempt. So I can also do it. I can rent it also. Even that is exempt. Everyone okay? Next. Guys, what if I have seedlings and saplings? Guys, what is it? Seedlings and saplings. Guys, remember nurseries? All those plant nurseries, guys, when they have business income, guys, is that taxable or exempt? The government says even seedlings and saplings, if you sell, that income will be completely exempt. Everyone okay? Next, guys, what if you grow flowers? Guys, growing flowers is called floriculture. Guys, floriculture, horticulture, guys, all that is also exempt. And also growing bamboo, guys, growing what? Bamboo is also exempt. Are we okay with this, guys? So, guys, seedlings, saplings, exempt flowers. I'm buying flowers and selling. Tax. Everyone, the word is cultivating or growing. Only that has to be there. Next. Guys, next to the agricultural farm, there is a farm building generally. Guys, which building? Farm building. Guys, do you know what is a farm building? Guys, who's staying in that farm building? Farmers. And what about your produce? Can you put it there? Yes. So the farm building, guys, is something that is close to the agricultural land. But what if I have some extra space and I give it to other agriculturalists to store their goods? That income also is connected to which agriculture? So farm building income is also completely exempt. This is which land? Rural agriculture land. Guys, rural agriculture land. Now I don't want to do any agriculture. My children are all doing something else abroad. I want to sell that land. Can I sell that land? Yes. The government puts a blind eye to this. Rural agriculture land, if it's sold, guys, if it's sold, everyone, what is this? Sale of rural agriculture land, guys. Do you think it's taxable or exempt? Guys, rural agriculture land, the government says, I know it does not increase so much in value. And even if it does enjoy it, it's completely not taxable. What is the word I'm using? Guys, it is not exempt. The word are different. One minute. Guys, sale of agriculture land, is that agriculture income? No. If I sell this building, is it education? No. If I teach here, is it education? Yes. Same way, guys, selling rural agriculture land is not agriculture, but it is not taxable. And if you want to understand the logic, guys, I have a rural agriculture land back in my village. We bought it for 10 lakhs, I think 5 years back. Today it is 11 lakhs. And that too with a lot of difficulty we'll sell it for 11. So it does not increase in value. And guys, the government doesn't tax which land, guys? Sale of rural agricultural land. Everyone okay? Can we recap? Guys, growing and selling. Exempt. Renting for movie. Taxable. Renting for agricultural purpose. Exempt. Flowers, creepers, seedlings, saplings, bamboo. Yes. Are we okay with this, guys? Yes. And this is which land, guys? Rural agriculture. As compared to rural agriculture land, there's also another land called urban agriculture land. Let's see the difference between urban and rural. It's the same kind of exemption, except SB, guys. What is the shortcut? Any guesses? S for? Guys, if I sell my urban agriculture land, now where is this land? Urban areas. So, guys, is it precious? So, who's with you? Government. Guys, think like the government. Who's with you when you sell this land, guys? Because now this land is in Bangalore, Mysore, Pune, Mumbai, Delhi, Gurgaon, Noida, guys, all urban areas. So, it's very precious, and hence, if you sell this land, guys, will it be taxed? Yes, under a head called capital. What is B for? Building. Guys, remember that farm building? Everyone. Where was that farm building? Next to that land. But now the land is in which area? Urban area. So this farm building is also an urban area. And what if you've written PG available there? Yes, so the government says, listen, even this farm building, whatever is the income, whether it's agriculture income, it doesn't matter. Guys, income from farm building is now what, guys? Taxable. This is also what, guys? So can you tell me the difference between urban and rural agriculture land? SB, sale of urban agriculture land. Is it taxable? And what is B? Building. Income from which building, guys? Farm building. That whether it's for agriculture or not, guys, it is taxable. So these two things in urban areas is taxable. All the urban agriculture land is more or less a myth. Like, where do you find urban agriculture land? Where in Bangalore will you find agriculture land? Yes, it's found on the outskirts. Is everyone okay with the concept of RAL and UL? So between RAL and UL, who has better benefits? RAL. Everyone okay. I'm asking you a question, guys. In my village, I have a house and I'm selling that house. Is that rural agriculture land? No, no, no. Guys, rural agriculture. It has to be agriculture. It cannot be a house and all. Yes, are we okay with this? Now, the second concept. Guys, what is rural? What is urban? I'm giving you an example, guys. A land in Mumbai, urban. A land in Bangalore, a land in Mysore, a land in Pune, urban. But how far do we need to go so that's urban or not? Is very simple definition. You must have seen this before and heard of this before. It's time to recap. They say if it's a very large city, it's a very large city like Bangalore, Mumbai, etc., then up to 8 kilometers from the municipal limits. How many kilometers? So if you go from the municipal limit of Bangalore up to how many kilometers? 8, guys, aerial distance, then the entire land is urban agriculture. What about outside? Rural. Are we okay? And if it's a smaller city, guys, medium-sized city, example, guys, not Bangalore and Mumbai, something like Mysore, then it's 6 kilometers. How many kilometers, guys? 6. So if you go to Mysore and how many after the municipal limits, how many kilometers, guys? 6. All that is what? Urban. Outside that, rural. So I'm just making a diagram, guys. This is, let's say, Mysore, and this is the municipal limit of Mysore. Have to go to how many kilometers? 6. And anything here is urban, here is urban, here also urban, here rural. Be okay. Next, if it's a smaller city, then they say 2 kilometers. How many kilometers, guys? And what is a small, etc. Depends on population. Depends on what, guys? Population. And if it's the smallest town, guys, where there is a municipal town, that they don't go anywhere, just the municipal limit, guys. How many kilometers there, guys? 0. Are we okay? All this is which land? Urban. Beyond that is which land? Rural. Can we recap, guys? Yes. So how do we know whether land is urban or rural? Guys, there's a land which is at 11 kilometers from a city. The land which is 7 kilometers from the biggest city of India. Urban. Are we okay? So please tell me the kilometers up to 8, up to 6, up to 2, and up to 0. This is depending on population, guys. If the population is more than 10 lakh, etc., when you write your handwritten notes, I'll tell you this. But you should know whether this is a rural land or urban land. Sir, how will they ask this question? I'll tell you. You saw Seema Agarwal Capital. Seema Agarwal is selling a land which is a distance of 7.9 kilometers from the city of Mumbai. Urban. So will you calculate capital gain? Yes. Seema Agarwal is selling a land which is at a kilometer of 8.5 kilometers from the city of Mumbai. Rural. In that, will you calculate capital gain? You will say that this is a capital, the rural agriculture land, and hence it is not taxed. Are we okay? So all these will be implication in practical sum which you see in the exam. So we understood two concepts. One is the exemption for rural and the exemption for urban. Then we saw what is urban and what is rural. And now, guys, the third one here, the third concept for which we need a calculator. So if you have a calculator, guys, can you get a calculator out? If you don't, please try and carry calculator. Phone calculators don't work, right? So as in they don't work in the exam. And even though scientific calculators, no, this is not Allen tutorials. Yes. This is Yeshas Academy CA coaching, and simple normal calculator will work well. All right. So here we go. We're looking at the next concept of rural and urban agriculture. And guys, there are some businesses which are basically have a mix of both agriculture and business. Yes. Like what I'm having right now is a cup of tea. Guys, this tea business, everyone, which business is this? Tea business. What do you grow? Tea leaves, guys. What do you grow? Tea leaves. What do you do with those tea leaves? You plug them. Yes, of course. Yeah, yeah. Of course, you plug them. Bagano se chune, those ads you see Tata Tea. And what do you do with those tea leaves, guys? You process them into tea powder and then you sell tea powder, guys, because you get maximum value out of it. So basically, this business where you've grown and you've sold what, guys? Tea. The government says, listen, you made a profit of 10 lakh rupees. How much profit have you made out of this, guys? 10 lakh. Now, you guys, you don't want to pay tax. So you are saying this is agriculture. You are saying this is what? But the government says, sorry, this is not agriculture. This is the concept of composite income. Everyone, what income is it, guys? You have to use this word in the exam. This is called composite income. Composite because it's composed of two things: agriculture also, business also. So the government says there is some angle which is agriculture, but there is some angle which is what, guys? PGBP. And what number is this? 10 lakh. What is this? Profit. This profit you have to split between what? Agriculture and PGBP. If you are doing which business, guys? A business. And what is the split, guys? PGBP will always be how much percent? 40. So balance obviously is how many percent, guys? Only remember 140%. Are we okay? So in the exam, if a person, Mr. A, is doing tea business, remember split it into which percent? 40, and the remaining is exempt because it is agriculture. Are we okay? And this is a rule called Rule 8. What is the rule, guys? Rule 8, because in India people have 8 cups of tea. Just remember like that. Some simple rule. Because the more rules, the more sections you code, guys, the higher is the impression on the examiner. Yes. And your job is only one. The person who's watching your paper, looking at your paper, they should be highly impressed with what you written. Your presentation, your sections, your rules, etc. That will make a lot of difference. Yes. All right. Next, guys, same thing, but coffee business. Which business? Guys, coffee, how is it? What is a coffee business? First, what do? You grow beans. Then what do? You roast it, you ground it, then you sell it. Guys, if you do a lot of that, guys, if coffee is grown, cured, roasted, grounded, flavored, etc., the government says this is not only agriculture. This also has what angle to it? Business. How much is the business angle? 40%. This is also 40%. Same like tea. So tea and coffee, what percent, guys? 40. Only thing real, the rule number changes. It's called 7B, B for barista. What is B for? So rule 8 and rule 7B. But guys, what if coffee is only grown and cured? Guys, what is coffee is only grown and cured? Then this percentage, guys, because you're doing less business, this percentage will become what percent, guys? 20. So for coffee, guys, how much percent is there? 40 also and 25. Are we okay with this, guys? Yes. Can we recap? Rule 8, tea business. Rule 7B of same way, guys, rubber also is grown first plants, rubber plants, and then it's made into synthetic rubber and sold ahead, guys. Rubber, there is a rule called rule 7A. Which rule, guys? 7A. I'm going slightly faster here because all this is deja vu. Yes, but guys, I can't move to next chapters without this. So I need to go through in that whole trajectory, and hence I have to do this with you before we move ahead. But we'll go slightly faster. If any of you guys don't understand it, don't recall it, don't recollect it, let me know. I can always slow down my pace. Now, guys, in this, what is this business? Rubber business. Again, what is your profit? 10 lakh. We don't split the sales, we split the profit. The profit, guys, is how much percent business? 35%. Are we okay, everyone? And last, guys, this is basically your grapes that you're growing. What are you growing? Grapes. Guys, when you grow grapes, this is agriculture. I want more answers, guys. When you're growing grapes, is it agriculture? Yes. But that grapes, guys, when it's converted to wine, this is what, guys? PGBP. Everyone. The grapes is converted into what? Wine. Now, guys, you own both the business. You have a farm where you're growing what? And just somewhere close to the farm, there's a wine vineyard, guys, where you're growing, where you're actually making the wine also in a factory. Now, guys, both are different businesses. Do you agree? This income is completely exempt. This income is completely taxable. Now, guys, as a smart businessman, Where would you want to show lower profit? Because it's taxable. Where would you want to show higher profit? So, guys, what you do, just understand this. Guys, you're selling grapes to outsiders for 10 lakh. How much did you sell grapes to outsiders for? 10 lakh. The same grapes you sold to your entity, guys, for 30 lakhs. You're selling grapes for how many lakhs? 10 lakhs. To whom? Will outsiders pay you more? No, why will they pay you more? They'll bargain with you. So you sell to outsiders for 10 lakh. The same grapes you sold to your wine factory guys for how many lakh? 30 lakh because it's yourself only. So now is this profit high guys? Yes, my sale is how many lakh? 40. My cost is let's say 5 lakh. So what is my profit? 30, which is completely exempt. And how did I increase the profit? By inflating guys. What is the word? Inflating my sales guys. I am myself selling my own produce to my own self for an inflated value of how many lakhs? 30 lakh. Now please tell me for the wine, let's say the sale is 40 lakh. What is the sale? What is the cost of grapes? And what is the production otherwise? 5 lakh, let's say. So what is the profit? Only 5 guys, which is taxable. So what you've done very smartly, and this a lot of people were doing, suggested by CAs only. That listen, yeah, you are only selling to yourself only. Then why sell it at 10 lakh? You can inflate it and sell it at how many price? 30. 1 minute on this. Is there something wrong here? Yes. 10 lakh rupee worth of grapes you sold yours to yourself only for how many lakh? And in the bargain, your agriculture profit is high and the taxable profit is, guys, repeating again. How much were the grapes for? 10 lakh. More participation. How much are the grapes for, guys? But you did you inflate it? But sir, why will someone pay 30 lakhs? Yourself only. You yourself are paying it. So you sold it to yourself at how many lakhs, guys? 30. Now is this inflating it? Now higher the profit in which case? Agriculture, which is completely exempt. So the government came to know this. So many people were doing this. Tomatoes to ketchup, strawberries to jam. And they were doing all this complementary businesses and they were making advantage of this. The government got to know and they made a rule called Rule 7. What is the rule, guys? Rule 7. And they said simple. If you're transferring it to yourself, it has to happen at market value only. Which value? So guys, please tell me what is the market value of these grapes? Not 30 lakh, guys. It is how many lakh? 10 lakh. So back to reality check. So whatever inflating, can you do it now? No, because this is as per which rule, guys? Rules. So guys, in the last 5 minutes, you learned 4 composite income. Let's recap the 4 composite incomes, guys. Rule 8. Rule 8 is for tea. What percent? 40. Rule 7b. Coffee. Again, what percent? If it's grown and cured only, then 25%. Then rubber, 35%. And guys, if it's your tomato farm and your ketchup factory, can you transfer your own tomatoes there? Yes, but only at. Can I lower the value? Yes, lower is okay. What is the problem? Higher. Inflation is the problem, guys. You cannot inflate. Be okay with this, guys. Yes. So with one shot, guys, they rubbished all that. So rule 7 says that you can only transfer it at which value, guys? Market value. This is agriculture. And now I'm making and meeting agriculture meet rates of tax, guys. The next fourth concept. So let's recap the concepts, guys. First, what is this? Rural agriculture land versus urban agriculture land. I want to ask you one simple question, which is very Bangalore question. Next to the airport, your grandfather had bought some land. Next to the airport, your grandfather many years back had bought some land. Today, your family is selling it for like 25 crore. Yes, it's going to change the face of your family, guys. 25 crore, the land is being sold. Now tell me, how do you know it's an agricultural land or non-agricultural? You see the papers. You see the paper. Some papers say that the land is which land? Agriculture. And some papers say that the land is NA. It's called NA. NA means non-agriculture. Guys, if you sell the non-agricultural land, taxable. If you sell the agricultural land, then you have to see the distance. If it's beyond 8 kilometers and all, rural exempt. So a lot of people, guys, have made great money by doing this, selling which land? Rural agriculture. Are we okay with this? Next, we saw kilometers, guys. Quickly recap kilometers. 8 or 6 or 2 or 0. Next, guys, which composite incomes did we see? Tea, coffee, rubber, and sale to your own self. Are we okay? Rule 8, 7b, 7a, and 7. Yes. Now the fourth concept is, it's a concept again from agriculture income, but it marries rates of tax and it's a combination of both. See what is happening. Again, we might use a calculators, but first let's see what happens here. Guys, you know that agriculture income is completely exempt. Guys, more agriculture income is completely exempt. And there is a person, let's call this person Mr. X, and he has agriculture income of 10 lakh rupees, guys. Should he pay any tax on it? No. But guys, Mr. X is very smart. Not just agriculture, he also has some PGBP income. Which income, guys? PGBP income, and the PGBP income is 5 lakh rupees. How many lakhs? And mentally, guys, he feels he should not pay any tax because, guys, income up to how many lakh? 5 lakh, you get what? Rebate. So mentally, guys, he feels he should not be paying any tax. Is that true? The government says rebate is for, yeah, individual only. Mr. X. Mr. X. Guys, he's saying agriculture is completely exempt. 5 lakh rupees is rebate. So should he pay any taxes, guys? No. So he mentally feels that his entire income is tax free because he does not have to pay any tax. Now the government comes in play, guys. The government said, listen, yeah, I give exemption for what? You should only have which income, right? Agriculture. If you truly want to be exempt, you should only have which income? Agriculture. But if you are smart enough to earn agriculture income and taxable income, guys, which two incomes are there? Agriculture income also, taxable income also, then we might apply a small rule called scheme of partial integration. It's time to recap this. For those who don't know it, I'll teach it from base, so don't worry about it. And for those who know it, it's time to recap it. So guys, the SOPI applies to pure farmers. No, because they only have which income? Agriculture. Does SOPI apply to me? No, because I don't have which income, guys? Agriculture. So guys, people who have only one of these incomes, this scheme will never apply. But for those smart people who want to also have agriculture income, also have taxable income, the government says this scheme of partial integration will apply. Ultimately, guys, the government wants more tax. So this is a way of getting slightly more tax from these kind of people who try to take both exemptions. So what is this scheme of partial integration, guys? It's from a chapter called rates of tax. Which chapter, guys? So we are now looking at tax because tax calculation is basically from rates of tax. So let's see how this tax is calculated. Can we have a calculator ready, guys? Everyone. So this person, there is a step one where we shock him, guys. What is the first step called? Shock. In shocking him, guys, we tax both his income. Taxable also in agriculture. Please tell me agriculture income how much? 10 lakh. Other income how much? 5. So total income is how much, guys? 15 lakh. And we calculate the tax liability on 15 lakh, guys. And total tax liability. Let's calculate, guys. Assuming he's below 60 years and he's under the old scheme. Up to 2.5 lakh. 0. 2.5 to 5 lakh. Tell me the gap. 2 lakh 50 on a calculator, guys. 2 lakh 50 into 5%. 12,000. See, for people who are doing tax articleship, all this is regular. But guys, I want to take the entire batch together. Yes. From 5 lakh to 10 lakh, what is the gap? 5 lakh into 20%. 1 lakh. And from 10 lakh to 15 lakh, guys, what is the gap? 5 lakh. On your calculators, 5 lakh into 30%. How much is that, guys? 1,50,000. Please tell me what is the tax, total basic tax? 2,62,500. Guys, anyone who earns up to 15 lakh, will there be any rebate? I'm always checking for rebate. No. But will there be a surcharge? No. Surcharge is only about 50 lakh. But there will always be a 4%. You will add that and you tell me the final number, guys. What is the final number? 2,73,000. As a person who never wanted to pay any tax, you are telling him in step number 1 that you have to pay 2,73,000. Guys, please use your calculators as often as you can. I'm telling you some traps which most people don't even put pen and paper together. They read, and they go for the exam. And the first time they're writing after months is in the exam. Don't do that. First. Second, they never use a calculator. They always read calculation. Don't do that. The exam, you'll be fumbling with your calculator. Make sure your calculator has a name also. Make it your best friend till your exams. Yes. Because very important to have that. Yes. Alright. Now this is the first step where is he shocked, right? Yes. Second step, we calm him down. We tell him, listen, yeah, on which incomes you don't want to pay tax? Agriculture income. That is how many lakhs? Plus, what is your basic exemption limit? On these two incomes, I will not calculate the tax. That means I will calculate and minus it. Are we okay? So let's calculate how much is this? 12 lakh 50. Let's do the calculation again. First, up to 2.5 lakh. 0. Then 12,500. Then 1 lakh. And then from 10 lakh to 12 lakh 50, what is the gap? 2 lakh 50 into 30%. 75,000. Please add all these numbers. 1,87,500. Please add 4% and tell me the final number, guys. 1,95,000. This I will minus, guys. So I'm minusing 1,95,000 from 2,73,000. How much is that, guys? 78,000. So a person, guys, Mr. X, who never wanted to pay any tax, now under scheme of partial integration has to pay tax of how many thousand? 70. Sir, understood the two steps, guys. Can we repeat the two steps? First, take which incomes? All. Agriculture, not other exempt income, only agriculture. And which other income? Taxable income, and calculate the tax. Calculate which tax? Total tax. Basic also, surcharge also, HEC also. Then, guys, calm him down. That second step is called calm down, guys. What is the second step called? Calm down. Which income he does not want to pay tax on? Agriculture income and basic exemption limit. Calculate which tax? Total tax. And then minus the two, and that is what he has to pay. Now, guys, this is called scheme of partial integration, whereby the government has got some extra tax. That's the intention. Government makes all policies either to exempt you or to collect extra tax. This is extra tax. Now, guys, SOPI never applies to Yeshas Academy. It never applies to Reliance. It never applies to people who pay flat rate of tax. It first only and only applies to people who have a basic exemption limit. You will recollect from yesterday and tell me who all have basic exemption limit. First, individuals. You, me, this next. Remember HABA, HUF, AOP, BOI, AJP. Only these people, guys, were subject to SOPI. So please tell me in the exam, guys, partnership firm. No. It has agriculture income. No. Because, guys, the government gets what rate? Are we okay? So only, guys, individuals and HABA, only they are subject. And, guys, you should have two incomes. Which income? Agriculture income also, taxable income also. Taxable income more than your basic exemption. What is your basic exemption limit here? It can also be 3. Excellent. Can also be 5. It should be more than that, and your agriculture income should be more than 5,000. Recapping, guys. If you're a pure farmer, who are you? All you do is agriculture, guys. Will SOPI ever apply to you? If you're only a businessman like me, will SOPI ever apply to you? No. But if you try to get both incomes, repeat, guys, if you try to earn both incomes, and the government says if you're smart enough to earn both incomes, then you're smart enough to also apply SOPI. Yes, everyone. Guys, can we repeat the conditions? Guys, when will SOPI apply, guys? It will apply only if you have a basic exemption limit. So will SOPI ever apply to a company? No. To partnership firm? No. Only to individuals and HUF. Yes. And it will apply when your agriculture income is more than and taxable income is more than your basic exemption, which is done in inter also. And now at final also. You'll be surprised that so many students at final level don't know this concept. Yes. But you should be strong enough to understand this concept and also to apply it in the exam. Sir, understood this concept. Now, how will this come in the exam, guys? I'll tell you, guys. There will be some individual who's having how many incomes? Taxable also. And they will not tell you apply SOPI. They will only say computers tax level. And you have to apply SOPI only when there are how many incomes there. Good. That's a subtle hint in the exam that if they enjoy both incomes, then apply SOPI. Alright. So that's the first part of the chapter, which is called agriculture income. I've divided exempt incomes into two parts, agriculture and the other. Yes. So let's do a small recap till here on what all we've understood. Yes. So the first concept is what, guys? RAL and UAL. Difference between the two. SP. Sale of which land? Urban agriculture. And what is B for? Building. I'm growing tomatoes and selling tomatoes. Exempt. I'm selling green vegetables and selling green vegetables. I'm Reliance Fresh buying it and selling it. Taxable. I'm Blinkit buying it and selling it. Taxable. Are we okay with this, guys? I'm doing floriculture. Exempt. Guys, by the way, what if I'm doing dairy? What if I'm doing some other culture, silk, pisciculture and all that? Guys, the government doesn't like any culture except agriculture. So the exemption under 10(1) is only and only for which culture, guys? Agriculture. So in the exam, a farmer is doing agriculture also and dairy also, which is taxable. Dairy. When I was explaining this, one student asked me a doubt. So you're saying dairy is taxable, but I have family members, I have some cousin, some relative who's into dairy business, and they don't pay any tax. I'll tell you why they don't pay any tax. Yes, India. Like 5 people in the family. How many people in the family? 5. Rebate is up to how many lakh? Each person shows income of 5 lakh. So guys, is the income taxable? Yes. But are they paying taxes? 1 minute, 1 minute. What did I just say? Your articleship stipend. Guys, is it taxable? Yes. But are you paying taxes? No. Why are you not paying tax? Basic exemption limit. Are we getting the difference, guys? Everyone. Tomorrow, guys, you get a job which is paying you 2,25,000 rupees. Guys. Is it taxable? I want more answers. Everyone behind, guys. Is it taxable? Yes, but you're not paying tax because of a basic exemption. Are we okay with this? Guys? Then we saw areas, land. Then we saw composite incomes. How many composite income we saw, guys? Four. And then we ultimately saw, which is called scheme of partial. Okay with this, guys? Now we've been in class for about 50 minutes. We've understood something. Let's spend 10 minutes and do some writing. So mentally it will be a break for you also. And then we will begin the other exempt incomes. Today, guys, all exempt incomes will come to an end today only. So we will wrap up very well this chapter of exempt incomes today. First part is already done. Let's start. Where did we leave the last? Did you manage to copy that one page, guys? Yes. If you've not copied that one page, leave that one side, no problem, and move to the next page and the next chapter. This is chapter number 2. No problem, guys. If you've not come written, I can understand. You can write it today. Right now, it's time to look at writing for the next chapter. Let's start, guys. Everyone, let's begin. I'll give very brief notes, not very detailed notes, because this chapter is something that we had already done at CA Inter. But you'll be okay with these notes as well. All right, let's start. Guys. This chapter is called Exempt Income. This is chapter number 2. And guys, the importance of this chapter is 3 on 5. Which section deals with this chapter, guys? Section 10 deals with exempt incomes. Guys, remember as many sections as you can. At the end of the class of DT, guys, I will give you top 50 sections which you have to remember for your exam. But till then, try and remember all sections, whatever I'm teaching you here in class. Section 10 deals with exempt incomes. Exempt incomes. Excluded, guys, is the word. E for exempt, E for excluded. For their computation. Next. I've divided the entire chapter into 2 parts. So part A. Agriculture. And we'll call it AI. In the exam, of course, you can't write AI. Section is section 10.1. Preferably the only 2 short forms in the exam you should use is this one, guys. What is this? Under section, and what is this? Under chapter. Otherwise, guys, don't use any short forms in the exam. Try and see whatever you're writing, head it in full. Alright. Perfect. So this is agriculture income. And in agriculture income, guys, first, rural agriculture land. Following are first. Going second. Land for agri purpose. Selling seedlings. Things. income, please write RALU, scale of tax. The word is different, the choice of word is not exempt. Next, guys, what about UAL? What is UAL, guys? Urban agricultural land. We use the shortcut. Same exemption, rural agricultural land, sale of urban agricultural land, taxable. Taxable. If you miss writing something and you want me to go back, I am happy to go back as well. Urban agricultural land, shortcut is SB. Is how do you know what is S, what is B? Today I'm here, you're here, great. But after a few months, right, how do you know what is SB? So put S in a box and income from farm building, put B in a box. This is how I relate my shortcuts to my words. So one thing I did for my exams, and I have seen a lot of students do this for their exams also, guys. Whenever you're studying, whatever you're studying, whether it's any subject, whether it's theory, whether it's practical, do it in a manner that you know that one day before the exam, how am I going to revise? Yes, so whenever you're picking a book also, guys, pick up a smaller book. Whenever you're thinking, should I make handwritten notes or not? The answer is yes, make handwritten. Because guys, all this will help you revise better and closer towards the exam. That's what is important. Yes. All right. Next, guys, rural agriculture land, urban agriculture land. How do we define it? So this is basically what is urban agriculture land is as follows. Not going to go very detailed, but only population and how many kilometers. So population, this is distance, municipal limit. Population is more than 10 lakh. Population is more than 1. In layman terms, if it's a very big city, or a medium city, or a smaller city, or the smallest town. Tell me guys, for this one, how many kilometers? 8 kilometers. From where guys? 8 kilometers from not your house. Municipal limit guys, from there 8 kilometers. This is 6 kilometers, 2 kilometers. Another thing which I had done personally myself, guys, my handwritten notes, I had used highlight, etc. Because life otherwise can get very, very dry and very black and white. So a little color will help. Also, it puts out the important words more. So these kilometers, if you have a highlighter, get it to class and use it. All right. This is done. Just saving this sheet. Guys, as and when we complete our notes, I'll upload them on the drive. So in case you miss copying them, etc., you can copy them from the drive. And then come, this is chapter 2.1. We now go to the next one. Very briefly, again, we'll write about composite incomes, guys. Why is it called composite? Any idea? Because it's composed of how many things, guys? Two. There are many, many composite income. By the way, 1 minute, guys. If I'm renting my house along with furniture, I'm renting what? House along with what? Furniture. That's also composite because renting of house will go under IFHP. Renting of furniture will go under IF. But is it together? So it's formed. So composite basically means which is comprised of many things. So this is also composite income. Everyone. Next point, please. Here we go. This is composite incomes. Again, guys, we'll make like a small table. What kind of business? What is the rule? What is PGPP percentage? So what is that? First one? Business. PGPP is how much? Don't try to remember both ways. So it'll confuse you. Just remember one. Obviously, this is 40. Automatically, this will become how much? This is completely exempt. This is tax. T for tax and E for exempt. Second business is which one, guys? Coffee. Rule 7, 40%. We'll also have to write one more coffee. If only grown, cured. Bangalore knows coffee growing better than Mumbai and Delhi. Delhi, though there is no coffee growing, but Bangalore and Karnataka has a lot of coffee growing. So if you only grow and cure it, again the same rule, but what percentage will apply, guys? 25%. So not giving you very detailed notes because guys, this has some background already, but these will help you revise very easily. This is composed of BGVP and agriculture, tea, coffee, rubber. Rule 8, 7B, 7A. And there's one more, guys. Rule 7. So summarize that rule here. Close this table and then we'll summarize 7 as well. Point. In case reproduce, example grapes are supplied to own business. Example wine manufacturing. Then transfer take place from one more point done. The next point, guys, is on SOPI, but we'll not write it here, right? SOPI means what are you calculating? Tax. So that will go in a chapter called rates of tax. So every time you think, oh, I want to know how people are taxed, you go to the chapter called rates of tax and you revise rates of tax. Yes. So we'll just mention it and we'll refer it to rates of tax. So please write scheme of partial integration, SOPI. Right, refer. great. So again, guys, the best part is if ever you want to revise agriculture income, don't look at any books. Not even this Yeshas book that I've given you. Don't even look at that. Just look at handwritten notes for concepts. Yes, and use all the time that you save on sums. More sums, more and more sums you do, guys, the better it will be. Yes. So this is part two. I'm just saving this as well. Point two, exempt. All right. So agriculture income is done. I don't expect a direct question from agriculture income in the exam, but guys, indirectly, how they will give you agriculture income is what I want to teach you guys. There is a company, guys, which has tea business. Which business? Tea business. So how much percentage will you take in business, guys? 40%. Are we okay? In a chapter called set off and carry forward. Which chapter, guys? Set off and carry forward. There's a person who has a loss from rubber business. So what percentage will you consider? 35. The other you'll not consider only. Are we okay with this, guys? Yes. I'm wrapping up agriculture, but I want to just summarize 2 points or revise 2 points, guys. Any other income which sounds like agriculture, animal husbandry, sheep rearing, dairy, even if it's connected to agriculture, guys, there's no exemption. It is completely taxable. Are we okay? And guys, second, I own shares of a company which does agriculture. Is dividend exempt? No. Guys, only if you directly do agriculture, it is exempt. Are we okay with this? So two things you have to keep in mind. And guys, they can confuse you with different terms like recent paper, RTP paper, mulberry leaves are growing. Guys, are you growing it and are you selling it? So it is completely. Are we clear with this, guys? Yes. So that could go an additional point. So if you can just summarize those two additional points here, guys. Let's just beyond that. Just put additional point. So first additional point is income from dairy. These small points. Income from dairy business. Sheep rearing. Also, guys, people who eat eggs, poultry are all what, guys? Taxable. Dividend received from agri company is taxed. What about the company who's doing agriculture? On that income, will it be taxed? No. No, 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 guys. Companies also. Agriculture income is exempt for everyone. Yes. Even if a company is doing agriculture, 1 minute, guys. Let's say a company, guys, which makes cotton bed sheets. They grow cotton and they sell cotton to their own. That part of the business is exempt. When they make the bedsheet and they sell, is that taxable? Yes. So anyone, guys, whether it's company, whether it's a family, whether it's individual, 10-1 is agriculture. Everyone is exempt from it, guys. Yes, as long as it's pure agriculture. All right. But dividend received from again agri companies was taxable because you've not done it. You only held the shares. So these are two additional points. So ending it here. The section is only one. That is section 10-1. All right. So with this, guys, we complete the first part of exempt income. I hope it was comfortable and I hope you recollected it well. Yes. All right. Now that I've done this part, we'll go to the next part. The next part is my favorite because there are small exemptions. We'll do 5 of them, or actually at final level, we'll do 10 of them, then we'll write. Then we'll do again 10 and we'll write, and then we'll again do 5. There are about 25 small exemptions. Don't worry. By the end of this class today at 9:30, when you walk out of this room, you'll not just know them, you'll also by heart the section. Yes, everyone. So 10-1 is which one? Agriculture. Yes, we'll move to the next one. Remain in class only, guys. 2 minutes, relax. We'll again start in 2 minutes. Yes. Yes. So, how many people are morning persons here? Who wake up in the morning nicely? Yes, good morning persons. Yes. Bangalore, I feel, is a city full of morning persons. Yes. It's a city which sleeps so early. Mumbai is opposite. Like, it doesn't sleep only. Uh, and how many of y'all multiple alarms you have to put to wake up, guys? Yeah. Nice. Someone has put both his hands up. Yeah. So, okay, I am also one of you guys, but now I have made peace with the fact that I have to wake up early. But I enjoy it actually. Yes, a balance. So the days I have lectures, I am waking up early. The days I don't, it's great. I can wake up late. But typically, guys, find your sweet spot till your exams. Of course, not classes you can't manage, but once you have your own set of self-study period, you have to find a sweet spot. Example, if you feel you're a night person, then make sure you are spending a lot of time at night and studying well. And if you're a morning person, so you have to figure that out. If you haven't figured that out, please, CA final is a great spot time to figure that out. Night person or morning person. I became a morning person for a couple of reasons, guys. In the morning, even if you are awake, there's no one else who's awake. Yes, so the disturbance levels are fewer. At night, the disturbance levels are higher. Everyone's watching TV, something or the other interesting is happening. Everyone's awake, so people are posting, people are replying to you, messaging you, etc. So I feel there's more distraction at night. I used to have my best study hours in the morning. I'll tell you my CA final study schedule sometime later. But I had my best hours of studying theory was in the morning. I used to wake up at about 4:30 and about 5 o'clock I would start. So 5 to 7:30, I still remember those 2.5 hours. Nothing happens. Everyone's sleeping. Even if you disturb them, they'll still go back to sleep. Yes, so no one's up and you are just purely, that is like the Zen mode of studies I had from 5 to 7:30. Yes. And honestly, it help me, yes, because I am someone who struggles with theory. So those 2.5 hours in the morning when you woken up fresh from your sleep, etc., I think that was really nice. And somewhere I think compromising on sleep has become something that is very okay. Everyone compromises on sleep. But I had done I had made sure one thing happens, guys. Before my exams, I was sleeping for at least 6 hours. Yes, I had told myself I don't want to compromise because, guys, you need to recollect all this in the exam. And although you might think that, oh, I'll be up the whole night and you'll not be able to recollect it. So don't compromise on sleep no matter what people tell you. Yes, the worst papers are the last two papers for people because the last paper people think, oh, I'll sleep, no, not sleep the entire night. After the exam, anyways, I have to sleep only. Don't do that. You'll not be able to recollect in the exam. You'll be very irritable. Yes. So sleep for 5 6 hours and nothing that you will do on the last day, which will always come in the exam. Yes. So that is something. I'll share more kind of these tips as and when we move ahead, and I'll also tell you how I set my schedule, especially for the 4 or 5 months that I got a study leave, how I managed it and what things I did and what I did. So probably you could also learn from it. Yes. All right, moving ahead, guys, on this chapter called Exempt Incomes. How I treat my DT classes are like going to Wonderla or to Magica, guys. When you enter a amusement park, guys, do you straight see the roller coaster? No. Guys, you first see the welcome board, then there are things, and then you see the roller coaster. Yes. So same way, guys, we are introduced. Yesterday was first day, second day today. Slowly and steadily we go, and we'll reach those chapters also which look like roller coaster rides. Yes. But I can't start with them. And trust me, if you enjoy the logic of tax, if you think like the government, you will not find too much of hassle with any chapter. Yes. All right. So we are moving ahead now. Section 10.1 is completely done. The first exemption was given to whom, guys? Agriculture. Now let's do 10 section and then we'll start writing. Everyone, so your attention, you need to understand two things, the exemption also and the section also. Guys, there is a HUF, Hindu Undivided Family. They have a profit of 10 lakh rupees after paying tax. After paying what? So have they paid the taxes already? Yes. Now what happens to this 10 lakh rupees, guys? There are 10 family members. Can it be distributed to the family members? Let's say 5 family members, each gets how many lakh? 2 lakh. Will it be taxed again? Because who's paid the tax? HUF. So this amount which is received by the members, guys, is exempt under section 10. Guys, this is which one? HUF. Because who's paid the tax already? The government that HUF already paid, you won't pay the tax. Are we okay? Everyone. So that's the reason, guys. Most people start in HUF. Here at CA Final, you should understand this. My father, my mother, me, and my sister. 4 people in the family. All 4 had incomes. My sister was working. My mom had interest income. My dad was a business, CA as well. And I all 4 had incomes. So we decided to start an HUF. Can you tell me the reason why? Yes, extra income. But guys, a HUF also has an extra basic exemption limit. So now, guys, we all had basic exemption limit. Now the HUF has a fifth exemption. So almost businesses in India, guys, most business families will start a HUF. Yes, and from that, if you get any profit, it is completely. Everyone okay with this? Next, guys, removing this, making it a partnership for profit of how much? 10 lakh. Is it paid profit? Tax is paid now. Each partner gets how many lakhs? Example, 2 lakh. Is it taxable again? No. Why? Logic. Partnership firm has paid the tax. So this is exempt under which section? 10(2) again. 10(2). Everyone quickly. 10(1). 10(2). HOF. This is 10(2)A. This is partner's share of profit. Guys, remember SIP. Salary, interest, profit. Salary and interest is not exempt. It's only profit. The profit that you get from a partnership firm. Guys, there are 3 partners in my partnership firm back in Mumbai. I'm the dormant sleeping partner because I'm into teaching. The other 2 partners, they draw salary. Is it taxable? Yes. We all 3 draw interest. Is it taxable? Yes. And we all 3 draw profit. That profit is exempt under section 10(2)A. Are we okay, everyone? Guys, going to the next one. Very small, small, small. If you have any doubts or understanding, raise your hand, ask me that out, we'll clear it. Guys, all of us have bank accounts. The money kept in a bank account, what do you earn? Interest. Is it taxable? Yes. Under which head of income, guys? IFOs. Whether it's savings account, FD, recurring deposit, any amount is taxable under IFOs. But guys, if you don't are not in India and you're abroad, like my friend who's in the US, he's a non-resident. Who is he? If he opens a special account in India called NRE account, which account, guys? Non-resident external. External means the money is coming from outside. And if he parks his dollars in India, government says thank you. Government says what? Guys, you and me park what money? INR. What is he parking? Dollars. So the government says thank you, and that's the reason, guys. On this NRE account, if you earn interest, if you earn, they pay 4.2% interest. How much percent interest? That's only a shortcut, guys. This entire interest is completely exempt. So your interest, my interest, taxable, but this guy's interest, guys, is exempt. So what does he have to open? NRE. Can you and me open an NRE account? No. The moment you reach the bank, they'll ask you for a status. And what can you park there? Dollars. You cannot park INR. You can convert them to INR, but you have to introduce dollars into them. Yes, everyone. Now see a final question. My friend is coming back from the US into India. Now he is a resident. Guys, he's coming back from where? To where? Now he's staying in India. He still has that NRE account. Guys, he still has interest. Taxable or exempt? Exempt. Because the source was which? Dollar. Now he cannot put fresh money. But the old money, which is still interests are coming on that, is still exempt. Yes, the old money. He can't put new money now that he is a resident. Yeah, no problem. But the NRE account, the source was what funds? Foreign funds. So on that, I'm not talking about fresh funds. On that fund, still if you earn interest, it'll still be exempt. No, I'm not talking about withdrawing. What if he has a lot of money, what doesn't withdraw? It's very easy to understand. The source of money is what? Dollars. Is it still in the bank account? On the interest, it will still be what, guys? Exempt. And that is 4.2 because the section is 10.4.2, guys. What is the section? 10.4.2. Yes, everyone okay with this? No. You resident cannot deposit dollars. Yes. So in this NRE account, you will only be able to open this NRE account if you're a non-resident. Are we okay with this? Yes. All right. But let's say you go for a job to Dubai and you start earning dirhams. Then can you open this account? Yes. You come to India, you open this account, or in the foreign branch also you can open this NRE account. You can deposit dirhams, that interest will not be exempt. That will not be taxed. Everyone okay? All right. Guys, the next one is slightly tricky. It has some legacy from your CA interface, so try and understand it. Yes. Yeah. Completely risk. ROR. Yes. No. He can keep the amount. He can keep that amount. He can't put fresh amount, but he can keep that original amount, and that interest is still exempt. Yes. But if he withdraws, obviously there's no money, there's no interest only there. Yeah. No. Okay. Is there NRE account? Yes. You put $1 lakh. Is that amount still there? Whether in dollars or INR, is that amount still there? Are you back in India? You cannot put any fresh money. But is the original money, if it's still there, on that interest is still exempt. Till you don't withdraw it, it's exempt. Alright. As we go to the next one, everyone hear me out well and see if from your CA Inter days, if you remember this guy. People, everyone on the screen, slightly detailed, hear me out. Guys, people who are in jobs, people who are in what, guys? Jobs, especially government jobs. Which jobs, guys? Government job. Guys, you are going for a holiday to Kashmir, guys. When are you going for a holiday to Kashmir? You, that is a self, plus your spouse, plus 2 kids. Everyone. How many people are going to Kashmir totally? 4 people. Flight tickets. I'm not talking about the sightseeing in Kashmir, the snow throwing on each other. No, not all of that. I'm talking about the flight which goes from Bangalore to Kashmir and back. That costed 40,000 rupees. How many thousand? Guys, who's going for a holiday? No, government employee, not government. Yeah, government employee. Absolutely right, guys. If the master or the employer pays his money, I call him master. Employer is the same word, guys. Is it some perquisite, guys? Is it a perquisite? 1 minute. Who's paying for it? Employer. Who's enjoying the benefit, guys? Slave or employee? So, guys, yeah. That okay. Employer, employee. For those who are new, guys, I call an employer as a master and employee as a slave. Yes. For people who work in big fours, you know why. Yes. For people who will work in corporates, you'll understand they make us work like slaves anyway. Yes. So guys, 40,000 rupees did the employer pay for you? So guys, everyone, just answer these two questions. Who's enjoying the benefit? Employee. And who's paying for it? Employer. So it's a perquisite. What is it, guys? Perquisite. But the government says that listen, two such vacations in a block of 4 years. How many vacations? Two. Guys, everyone, two vacations in a block of 4 years. And only for vacations in India, guys, the government says this is exempt under something called leave travel concession. So called, guys, leave travel concession. So is this a perquisite? Yes. How many thousand? 40,000, but this will be completely exempt. So how much will be taxed, guys? Zero. And this exemption is given under a section called section 10(5). Repeating. Are we going for a holiday? That holiday should be in which country? India, not abroad. Guys, what if you go to Singapore? Then that perquisite is taxable only if it's in India. In how many block of how many years? 4 years. How many times? Twice. Are we okay with this, guys? Yes. So don't go into too much of detail. But if LTC comes in the exam, which section will you quote, guys? Section 10(5), and this is leave travel concession. Are we okay with this, guys? Yeah. Any questions, guys? Raise your hand. Ask me. We're happy to help you with any doubts that you have. All right. Guys, LTC nowadays is not given in private jobs. For example, guys, if you start working at Google, Google says, listen, you're going to Kashmir. You pay for yourself. I'll give you higher salary. I'll give you what? Higher salary. So nowadays, guys, all these concepts are of which companies? Government. Guys, private companies don't. If you join tomorrow, EY, KPMG, PwC, Citibank, they don't give you all this. It's just say you want to go to Kashmir. I'll give you higher salary. I won't pay for your tickets and all that because they want to avoid all these LTC. Yes, everyone. All right. So recapping section 10(1), agriculture. 10(2), HUF. 10(2)A, partnership firm, also LLP. 10(4)(2), NRE interest, and 10(5), guys. 10(4)(2) is very common. Most of the people who are abroad, guys, they come back to India and they open an NRE because, guys, the interest is completely exempt. I know people who put crores of rupees in these NRE accounts and they get lakhs and lakhs of interest on it completely exempt. In a world which is highly taxed, guys, India the rate is about 30%. Europe the rate of tax is 50%. America the rate of tax is 40%. In a world which is highly taxed, you have some great income which is exempt. Everyone uses this. But you have to be an Indian who's working where? Abroad. You have to park your foreign fund. Now, guys, this is 10(5). Let's go to the next one. The next one is slightly different. Hear me out well. Everyone, hear me out well. Guys, half the class here, guys, you all are all working in UAE. Where are you all working? But you are working for the Indian government in the embassy. Yes. And half of you guys are working in France. Where are you guys working, guys? France. Again, for whom? Indian government. All of you guys are working for the Indian government. Yes. Guys, please tell me every month who will pay your salary? Government. Okay. Your salary will come in for them in the Dubai account, for you all in your France account. Guys, this in UAE, what is the tax rate? Zero. And in France, the tax rate is 50%. Both of you guys are working for whom? Indian government. But is that discrimination? Yes, these guys will be happy. You guys will not be happy because you are paying so much tax. So you all complain to the government. Of course, not them. You all complain to the government because you all are paying very high tax. So the government said, listen, we are making a rule. Government of India went and made an agreement with all countries of the world, and that's called DTA, Double Taxation Avoidance Agreements. Be a part of it, everyone, guys. And the government said, listen, UAE, listen, France, listen, Germany. If my people are working in your country, if my people are working in, I will tax my people. The shortcut is we tax our people. Repeat, we tax. So, guys, now anyone working for whom? Reliance? No. Adani? No. Government of? Then, guys, your salaries will be taxed where? In India. So now tell me, this salary will be taxed where? In India. Now, same way, guys, people from UAE are also working where? People from France are also working where, guys, in India. Now, let's talk about this French guy who's working in the French embassy in India. Guys, if I'm taxing you, French government says even I want to tax my people. So imagine, guys, a French guy speaks very nice French. He's working in Bangalore in the embassy. Now, who's paying his salary? French government. But we can't tax it because we tax Our people, they will tax their people. Now connecting to this chapter is, where is the French guy working? In India. Is he getting salary in India? But we can't touch it. It is exempt under a section called section 10(6). Which section, guys? 10(6). Everyone, can we repeat this? We tax our people and they tax their people. Yes. We tax our people means everyone who's working where? Abroad. For which government? Indian government. Who will tax them? Indian government. And same way, anyone who's working for the foreign government in India, guys, we can't tax them. Guys, who will tax them? So we have to exempt them under which section? 10(6). Are we okay? Yes. Next, 10(7). Guys, where were you guys working? France. And where were you guys working? UAE. Were you getting salary? Guys, the salary is very petty. Small salary, 1 lakh rupees, 70,000. In France, what happens in 70,000 or 1 lakh? Nothing. So you also get some allowances. What do you get, guys? Allowances. You get 7 allowances. How many allowances, guys? These allowances, I will tax your salary. We tax our people. But these allowances will be completely what, guys? Example, if you're in France, you'll get some stay allowance, accommodation allowance, food allowance, etc. Those allowances are exempt. Salary, taxable. Good, guys. Understanding well, everyone. So repeating and recapping. Guys, we tax our people. People in France, people in Germany, people in UAE working for Indian government will be taxed in India. But the allowances, exempt. We go to the next one or two. Very simple one. If you have a girl child in India, guys, there's a special account you can open for them. Sukanya Samriddhi account. I don't know how many of you guys have a Sukanya Samriddhi account, but now it's a little too late to open. Yes, you can open up to how many years, guys? 10 years, I think. You can open if till the girl is 10 years, you can withdraw later. But anyways, doesn't matter. All those rules are not applicable. So let's say you have a girl child and you open a Sukanya Samriddhi account. Guys, can you put money in that account? Yes. Who can put money in that account? Parents. Who else? Legal guardian. Who else? Even the girl child can put. Yes. Now, guys, I'm not talking about putting the money in, guys. Can you withdraw that money? Yes. When you withdraw that money is completely exempt. And guys, generally by the time you reach 18 years, about 11 lakhs will be put in that. Guys, about how many lakhs? Because why am I saying that? That's exempt under section 10(11)(a). Everyone okay? So which is this account called? Sukanya. Sir, when is it opened? How is it opened? Guys, don't go to the post office and open a Sukanya somebody to figure this out. No. All you have to do is from tax angle you have to understand, guys. If you withdraw money from which account? Sukanya Samriddhi. Is it exempt? Yes. Under which section? 10(11)(a). Yes. Worst case, guys, write section 10. But try and figure if you can, and once one two recaps and you'll be able to understand. All right. Next, guys, and the last one before we start writing, guys. And there is some very big calamity in India. Big calamity. Some flood, some earthquake, etc. And the government or some NGO is paying you money, guys. Is it taxable? No. Guys, remember, it's the government paying you in a big calamity. Your house is destroyed in an earthquake. If we tax you, how will you build that house? So that money which you receive in a big calamity. Which calamity, guys? It is exempt under section 10(10)(b). Everyone okay with this? All right. So this is where we stop. We recap and then we write. Section 10(1). Section 10(2). Yes, section 10(2)(a). Partnership form. 10(4)(2). NRA. 10(5). LTC, guys. Yes. You generally take 5 vacations. Out of that, 2 of them are exempt, guys. Remember like that. So 5 vacations. 10(6). We tax our people. That's French guy. Yes. Then 10(7). Allowances. 10(11)(a). Sukanya Samriddhi, and 10(10)(b)(c) is big calamity. I'm not counting, but I think this is where we'll start writing. Again, we'll get back to 10. Again, we'll write 10. Yes. So that's how we move ahead. All right. Yes. This is the third part in my handwritten notes, but this is part B. Please write part B. Other exempt income. Right. First, focus on the concept. Once that is understood, then look at the section and then try and see if you can remember both. As here, we'll not number it. We'll keep writing them. 10(1). Agree income is exempt. We've already discussed that, so no more discussion on that. 10(2). Share of profit. of members of HUL is exempt. Guys, all the non-residents are so happy. I tell you, one of my clients, why he's so happy every day, guys, he's celebrating. First of all, he's put money in which account? Yes, he's in Dubai, but he deals in US dollars, guys. This business is basically into chemicals. He's a client of my Mumbai firm, but he's a friend of mine also. He basically buys chemicals from China and sells them to Africa. And he sits in which country? UAE. So he's paying how much tax, guys? See the amount people are cribbing about tax. See this guy. He's sitting in Dubai every morning. He calls all Chinese companies who make chemicals. He buys these chemicals from China, ships them to Africa, and sells them in Africa. A 100 rupee chemical is sold for 500 rupees. So is it high profit? Very high profit. Sitting in which country? UAE. How much tax? Zero. Of course, now corporates have to pay a certain tax there. So he's paying very small tax more. But there are exemptions, etc. So till recently he was not paying tax, but in UAE, very small tax he's paying. Now, guys, where does he park that US dollars? In India. In which account? NRI. So he's sending that money to India. Government has no problem when you bring in money. The government only has problem when you take out money. So the money is coming happily into India into an NRE account which is opened in ICICI Bank. Now on that NRE account, what does he earn? Interest. That is completely exempt. And guys, in the NRE account, he did not convert it. He parked it in US dollars. And when he parked it, I remember, guys, he's been parking the money at 60 rupees a dollar. 62. And suddenly, guys, $1 is now 87. So, guys, what he's earning is interest is nothing. Guys, he's got from 60 rupees to 87, 30% jump in dollars. So, what he parked was when he parked, example, let's say $1 lakh. $1 lakh when he parked was 60 rupees. So, how many lakhs? 60 lakh. Today it became how many lakh? 87 without doing anything. So, these kind of people are going crazy. They are making a lot of money and they are saving a lot of tax. Yes. So, whenever you think about, oh, what can a CA do, guys, they can plan your taxes to a large extent to help you save your tax. Yes. He was actually, his business was never in Dubai. He was always in Mumbai. He shifted to Dubai with his family, etc. Everything, mother, everyone shifted because some CA suggested this plan. So now he's saying a lot of tax. All right. Anyways, moving ahead. The next one is section 10.6. These are foreign citizens. Sorry, next 10.5. Leave travel concession paid by for travel in India in 4 years. 10.6. The foreign citizen shortcut for foreign government in India. Salary exempt shortcut. They tax their people. They tax their people. Allowances which is paid to people working abroad for government of India. Yep. Their salary is taxable in India. We tax. It's just checking what is WRT with respect to. We've been in class for about 1 hour and 40 minutes. When it's 2 hours, then we take a break. Yes, I can understand everyone needs a break. So at 2 hours, it's a good time to take that 15-minute break. When we come back, then we'll complete the class till 9:30. Yes, but it's going good. I'm just going to recap. Section 10.1, agriculture. 10.2, HUF. 10.2A, part. Oh, by the way, HUF gives me profit. Exempt. Why? HUF hasn't been taxed. Partnership firm pays me profit. Exempt. Why? But a company pays me dividend. Taxable. Company also pays a tax. You also pay the tax because company has a separate legal identity. Yes, so that way both are taxed. Even company's tax, even we are taxed on a dividend. That's not here. Then 10.4.2 NRE account. Guys, LTC, how many vacations you want to take? 5. 10.6 is that French people. 10.7 are the allowances. 10.10 BC is big calamity. And then 10.11 A. Yes, we now go to the next one, guys. The next one, some are simple. So I'm going to start with one, two very simple ones. Yes. Only the allowance. So if, for example, you are working in France, these guys are working in France, they'll get salary plus allowance. Salary will tax in India, allowances are exempt. The logic is if I'm going to tax their allowance, I'll tell you the logic also. Then how will they survive in France? So if I'm paying them the stay allowance and I tax it, then they will not be able to stay there. So on that note, guys, we come to the next one. Some of them are very simple. Let's talk about guys. Recently, the chess world championship. Who won? Mukesh. And how many crores he won, guys? Yes. And there was a huge controversy. They put Nirmala Sitharaman's face. She's smiling and laughing and clapping, and they have made a meme that she will tax it. But yes, exempted, guys. So there are some of these awards. There are some of these awards. And when you win these awards, example Padma Bhushan, Padma Vibhushan, Padma Shri, all these awards when you win, guys, of course, there's be a nice trophy and all, but along with that, there's some money. Guys, is it logical for the government to tax that money? So the government says, listen, if you win any of these awards, these are exempt under which section, guys? 10, 17A for what, guys? Awards. Everyone okay? So all those memes had to end because ultimately, guys, I was laughing because I knew ultimately the government will exempt it. They cannot have something like this taxable. IPL money, taxable, guys. IPL and all is taxable. So IPL money when you get is all taxable. Um, but the government comes up with notification that these particular amounts will not be taxed. Example, guys, if someone wins a gold medal in Olympics, big deal for India. And if they win some money, do you think India will tax it? So this is the section where they notified that this amount will not be taxed. Like Gokesh's amount is not taxed under this section. Yes. Taking simple ones first. Next, guys, MPs, MLAs in India, do they get salary? Yes. If you didn't know, you should know, guys. MPs, MLAs, every MP gets a salary. Is it taxable? Yes. Guys, some myth in India. MPs, MLAs salary is not taxed. No, it is taxable. Guys, army people, what do they earn every month? Salary. That's also taxable. Guys, people have a lot of myths in India. If there is income. That's why I made this golden rule. If there is income, there will be tax. So guys, MPs, MLAs, when they get salary, guys, is it taxable? Yes, but they get allowances, driver allowance, stay allowance. All that allowances is exempt under a section called section 10. Everyone okay? Guys, so MPs, MLAs salary taxable, but allowances exempt. Same like that French France guys. Right. We go to the next one. Guys, you can open a savings account in where else? Where can you open a savings account? Yes, banks you can open as well as post office, but we don't generally open one in post office because who goes to a post office? Yeah, ICICI Bank looks better and feels better. But if you go to a post office and you open which account? Savings account, and if you earn interest on it, the government has incentivized it and pushed you, and they said that if you go to a post office, then under 1015 guys, you will get an exemption of 3,500 per annum. So what if your interest is 13,500? 10,000. Are we okay with this? And if it's a joint account, then it will be 7,000. How much, guys? So this will encourage you to go where, guys? Post office. So this is section 1015. This is MPs, MLAs allowances, and these are awards. Very simple one, guys. Now I want to go to something very slightly complicated. I need all your attention for this one. Guys, now that you're at CA Final, I'm sure you know what is a life insurance. Can you define what is a life insurance policy? A policy whereby you pay premium every year, and at the end, if something happens to you, your family gets money. Is it a security for your family? Yes. That's called life insurance policy. Some life insurance policies have no money back. Example, if you know more, of course your family will get your money. But what if nothing happens to you in those 20 years of the policy? Then nothing happens to you, you don't get the money back. But there are some policies which are money back policies. Which policies, guys? That means, guys, in 20 years, if something happens to you, your family will get money. And nothing happens to you also, you will get some money. That's called money back policy. Everyone okay? So which policies are we talking about, guys? Life insurance policy. Very, very important discussion. Hear me out. Throughout your tax, guys, throughout your CF, and you'll see these policies very often. And one amendment happened recently. That's why it's very, very important. Everyone want all your attention on life insurance policy. You took a policy where the sum assured is 10 lakh rupees. How much is the sum assured? That means if something happens to you, your family will get how many lakhs, guys? 10 lakhs. Yes. And every year you are paying a premium, which is a very low premium, guys, of 8,000 rupees. How much premium are you paying? 8,000. Guys, this is all people who are securing their family. Guys, you think like the government, like the person who's securing his family by paying 8,000 rupees every year, collecting money, why should it be taxed? So the government says, listen here, if it is on reason of a death, which reason, guys? I want more repetition. If it's on what? Death, and your family gets the money, then I am with you. On that death, guys, the government is also sober and they are also unhappy about it. So they feel, I don't want to tax this. So on death, if your family gets how many lakhs, guys? 10 lakhs. This amount will be completely, whether it's 10 lakhs, whether it's 1 crore, whether it's 10 crore, whether it's 100 crore. If it's on death, there is no tax at all. Are we clear about it, guys? So on death, there is no tax. It's completely exempt. But guys, what if it's not death? What if the policy was for 20 years? How many years, guys? And you survived those 20 years and now you're getting your money back. And the government says, we'll check the premium. We'll check if the premiums have been low. Guys, everyone, what has? Premiums have been? That means you're not a very rich person. You're paying low premiums, small premiums. Then also it will be what, guys? Exempt. Guys, death? Exempt, always. Then you will not check anything. If otherwise, if the premiums are low means people who are middle class, lower middle class, they are paying low premiums, small premiums. It is also, what is low? I'll teach you guys. But guys, if the premiums you pay are what, guys? High. That means, guys, you are paying big premiums. If you are rich enough to pay big premiums, then you're rich enough to also pay what, guys? Tax. Everyone. Guys, so understanding, let's bifurcate. Guys, on death, will you check for low, high premium? Nothing, guys. If the premiums are low and if the premiums are high, now let's see what is low and what is high. Of your sum assured, repeat, of your, if it's 10%, up to how much percent? 10, then it's low. So 10, what is the sum assured here, guys? 10 lakh. 10 lakh, 10%. 1 lakh. How much premium are you paying? 8,000. Is it low? Yes. Government says no problem. I know you're not paying too much. Exempt. Changing it to 80,000. Exempt. Changing it to 1 lakh 8,000. Government says if you are paying such high premium, that means you have a lot of money. That means it is taxable. So what is the percentage there? 10. If the policy is taken today, if the policy was taken many years back before 2012, before which year? 2012, this 10% was 20%. Before 1st April 2012, what was the percentage? 20%. Now that percentage has changed to what percent, guys? 10%. Are we okay with this, guys? Yes. So in the exam, check when the policy was taken. Policy taken by your father in 2011, 20%. Policy taken by you in 2018, 10%. Are we okay? And for disabled person, guys, this 20% has changed to 15%. For example, if you're talking about disabled person, then they can pay up to how much premium, guys? So earlier 20, now 50. Are we okay? Guys, this is low premium. Example, a LIC agent comes to your house. 1 minute, please. A LIC agent comes to your house, sitting with your parents, saying that there's an amazing policy of 20 lakh rupees. How much? Annual premium 2.5 lakh rupees. Do your parents take that policy? No. Guys, is it more than 10%? So whenever your father gets that money, it will be taxable. You tell your father, stop, don't take this policy because this is not tax. This is taxable. Same policy, 20 lakh, premium 1 lakh 80. Take it off. Because, guys, what percentage? 10%. Are we okay? 10% of what? Guys, can we repeat this, everyone? Guys, death, exempt, low premium, and high premium, taxing. Now, guys, they've added another layer to it. If the premium that you're paying, guys, I'm giving you a very big example. Sum assured 1 crore. Everyone. This is a sum assured. Is it a big policy? Yes. Up to how much percent can you pay premium? 10% is how many lakh? 10 lakh. You are paying premium of 6 lakh. Are you paying premium? Which is low. Not death. Please tell me this is low premium or high premium? Guys, low means up to how much percent? 10% means up to how many lakh? 10 lakh. You're paying how many lakh? 6. But the government says they made another very recent amendment. They said that if the premium that you're paying is more than 5 lakh, more than how many lakh? In 1 year, can you afford to pay 5 lakh rupees? Then you can also afford to pay. So, guys, now there are another layer, guys. First, death. I will not check anything. Second, low premium. Now there are two highs. High means above 10 also, and high means above 5 lakh also. Are we okay with this? It's just adding one more layer. Guys, amendment basically means some small changes happen. So now I'm giving you 4 policies. You tell me, guys, will it be taxable? Will it be exempt? Guys, this is not paying the premium. This is receiving the money. Guys, some person got 100 crore rupees on death of a family. Low premium, high premium? Nothing is checked. Are we okay? A person got all the premiums have been low. Exempt. Everyone okay with this, guys? Guys, premiums have been paid at 11% of the sum assured. Taxable. Premium have been paid at 6% of the sum assured, but 6 lakh rupees. Are we okay? So now, guys, you have just one more layer here. Just high also is taxable, and above how many lakh, guys? 5 lakh premium is also what, guys? Not paying the premium, guys. This is getting the money. Are we okay with this, guys? And whenever you see exemption, guys, this is an exempt under section 1010D. Can we repeat, guys? Section 1010D. And this 5 lakh amendment they made from the 1st of April 2023. Which year, guys? So this 5 lakh thing only applies to policies which are taken on or after 1st April 2020. So if it's a very big policy before that, no problem. Only from 1st April 2020. Everyone. So this is a very difficult one, but you understood well. Can we recap? Section 1010D. D for death, guys. Is it a life insurance policy? You're getting the money or you're paying the premium? No, getting the money. If it's on death, exempt. If you're getting the money and all the premiums were low, exempt. Even one premium was high, taxable. And policies after 1 April 2023, you have to see high also, and you have to see 5 lakh. Are we okay with this, guys? Yes. Now, guys, in your client cases also, if you go into an office and you're a small mid-sized firm and there's an individual, guys, and the wife has got money because the husband has passed away, all the premiums have been low. One of the premium was high, And your client is coming to you with a policy. He's saying, you're a CA, article, I want an opinion. He wants to take a policy of 1 crore rupees. Policy premium is 7%, that is 7 lakhs. Tell him, don't take that policy. Because whenever you get the money, it will be taxable. Are we getting it, guys? Yes. And it's not just individual. After 1st April 2023, even if it's 2-3 policies, the premium should not be more than how many lakhs, guys? 5 lakhs. And the logic, guys, understand it from the government's perspective. The government is saying if you can afford to pay more than how many lakh premium, then you can also afford to pay what, guys? Tax. That's the logic. That's 1010D, 1011A we understood. Now, guys, one more small, then we'll write those. Guys, in India, if you don't get a private job, there is a government job called Agniveer. Heard of it? Guys, not heard of it? Let me tell you. There's a scheme called Agniveer scheme. Which scheme, guys? Guys, people who've not seen newspapers, at least, guys, scroll through memes very regularly. You'll see all this there. Yes. So, Agniveer scheme, guys, is a scheme of the government where they say, listen, you can enroll in the army. You can enroll in the army. Whenever you want, we'll call you. And when we call you to serve the nation, we'll pay you salary. We'll pay you what? Salary. Now, you tell me, guys, if there is income, there will be tax. So, when you, as an Agniveer, let's say all of you guys become Agniveers and you get salary. Is that salary taxable? Yes. Under which head? Salaries. Is that okay, guys? Yes. But besides your salary, everyone, hear me out. Last bench that who's going to meditation mode. Yes. Yeah. If of course salary is taxable, but besides salary, guys, there's a fund called Agniveer Fund. Which fund? So there's a small gift for you at the end of the period or retirement. You'll get that fund, guys. In the Agniveer Fund, can the employer contribute? Everyone. Can the employer contribute? I'm not getting the answers. Okay. So are you an Agniveer? Yes. What fund has been made for you? Your salary will come into your bank account, but separately a small gift to you into your Agniveer fund, guys. Who puts in the money? Government. Who else can put in money? You yourself can also contribute. Let's say employer contributed 1 lakh, you contributed 1 lakh. How much is the money? 2 lakh. Who uses that money? Government. Till it's paid to you, guys. Who uses that money? Government. And after 10 years, guys, that money is being paid to you, guys. So how much did the master, how much the employer put? How much did you put? Total. On that you earn interest. On that you earn what? And totally the amount has become 3 lakh 20. And now you're withdrawing it, right? Government says that amount, thank you so much for serving that amount withdrawn from which fund? It's completely exempt under a section called 1012C because you've been a champion for the country. 1012C is what, guys? You okay with this, guys? Very new ones. So these are the new ones which I'm teaching you. 1012C. C for what? Any amount withdrawn from which fund? Agniveer fund. Fully exempt. Are we okay? And 1010D, life insurance. 1017 awards. Yes, 1017 MPs their allowances are. Yes, let's write these and then it'll be almost time for a break. All right. Yes, some have layers to it. Some are very simple, guys. So it is a mix. I'm going to the new page and I'm going to write some here. Everyone, let's write the easy ones first and then go to the difficult one. Next one. 10, 12C. The champion, 10, 12C. Amount withdrawn. New Year fund. Fully exempt. Just from Agniveer. Interest from post office savings account. Exempt up to 3,500 per annum. 7,000 per joint. 1017. Allowances received is their salary is taxable. Very unique. The salary is taxed under IFOs. Very unique. At CA final stage, I'll tell the logic also, but in some time. Allowances are exempt. Their salary is also taxable, but under IFO. 17 K for award. Years. Certified by We go to the next one. Slightly different. Write it well. Section 10(10)(d). Paid but received live or policy. It's referred to as LIP many places. Yeah, yeah. Always, always registered. Yes. So like a CA, who's a CA? Who's registered with ICI? Same way, NGO. When I say NGO or trust, etc., only those which are registered. NGO can be private, even they can be registered, but has to be registered. Now, let's say you want to. I'll tell you. When they register, right, they will register you as an NGO only if you're doing greater good for the public. Example, you start an NGO for the benefit of your family, they'll not register you. You start an NGO which is only serving people of Jayanagar, they'll not register you. So basically, it has to be for the greater good of everyone, then they register you. And the registration is under section 12AB. And if you register, only then you get benefits. That's how it is. Yeah. Yes. Yes. Yeah. They will not name that person, but they will specify the body who's paying it. So paid by the Indian Olympic Association, World Olympic Association. Yes, similar, of course. There's a precedent there. Then if subsequently anyone else also wins from there, it will be exempt. This is 10(10)(d), amount received from life insurance policy. This is now very, very important. In that, guys, we'll make few arrows here. If received on death, is exempt. If all the premiums paid were low. What is low? I'll explain ahead. And also this is exempt. If any premium paid was this on 1st April 2023 onwards, if premium paid is taken on greater than 5 lakh. is very important. This one, especially this policy after 1st April 2020. Just checking again, is it paying the premium or receiving the money, guys? Receiving. We're talking about when you receive, what happens, the exemption and taxability there. All right, and what is this low and high, guys? Can we summarize that? So here, low, premium to what percent, guys? 10%, sum assured. Policy before 1st April 2012, it was what percent? 20%. This is what is low. And obviously, if it's not low, automatically it is what, guys? Yes. And for disabled person, yes, so disabled persons, 15% sum assured. Before 1st April 2012, 2013 for disabled. 20. Guys, don't remember all of this. Main thing is 10%. Which one will you remember? 10. 10 is there, 20 is there, 15 is there, but mainly is 10%. Remember that percentage. And depending on when you've taken the policy. So guys, today you go to your office and a client is asking you a question that he wants to take a policy today, guys. You have to keep in mind two things, 10% also and 5 lakh also. Guys, is insurance something which is a protection for your family or is it an investment? No, actually it's a protection for your family. That's why it's exempt. The moment it becomes an investment where you invest high amounts, etc., it is taxable. That's the logic of the government when they tax this. So this is section 1010D. Exactly 2 hours and 2 minutes of hard work. Good stuff, guys. Just let's quickly recap all the sections till here. 10.1, 10.2, partnership. No, HUF. First is HUF for family first. That's how I remember it. Family first. 10.2A, partnership form. 10.4.2, NRA interest. Good, guys. 10.5, LDC. 10.6 is those France people when they come to India. 10.7 is those allowances which you pay. 10.10 BC, they can have. 10.11A, so 10 has something. Who's the champion, guys? Agni. 10.12 C. 10.15 is that post office. 10.17 awards. 10.17 MPs, MLAs. Their salaries tax, but the allowances are exempt. And guys, if you receive any life insurance money which is exempt, 10.10D. Right now we're talking about exemption, right? But in a chapter called TDS, we'll talk about the taxability. So we should know that also. That is high and high premium. And what is the premium percentage, guys? 10. Just remember 10%. If it's very old, 20. Disabled is not even important. 20 became 50. Yes. Good stuff on the understanding and the by hearting also. We are very close to the last few. When we come back, we'll discuss the last few. Right now it's 8:35, 8:45. It's 10 minutes. Is that a good break? Yes. We can't afford a longer one, so 10 minutes for today. And please get him a cup of coffee. He's going into meditation mode. Hey, you were asking about that HUF, no one still remember. You are. Okay, so I'll tell you the on the All right, guys, back to the coffee powered session. Yes, it almost smells like a cafe here. Yeah. All right, and we are back looking at some more exempt incomes. It's going very smooth. I'm just going to save this sheet. Yes, a few doubts were asked in the break to me. I'll be discussing that with you guys before we move ahead. So, point four. Guys, all that is stored here will go into the drive slowly and steadily, and you'll be able to access the drive as well, and all these files as well from the drive. Guys, you've taken three policies after 1st April 2023. How many policies have you taken? Three. Premium of the first policy is 2 lakh. Second premium is 3 lakh. Third premium is 3 lakh. Total it up, guys. 2 plus 3, 5. 5 plus 3, 8. Is it going more than 5 lakh? Yes. So there's a problem. Some of it will be taxed. Now, which one? That's your choice. So be the smart one, guys. Which is the bigger policy? Will be exempt. So one 2 lakh policy and one 3 lakh. How many policies? Two will be exempt. The third one, taxable. Give you another example, guys. 1 lakh, 1 lakh, 1 lakh, three policies. Total. Yes. All you have to check is 10% also. Guys, you have to check two things, 10% also and high also. I is giving another one. One policy of 5 lakh, very big policy, and two policies of 1 lakh. 5 plus 1 plus 1. 7. I'm talking the premium. How many lakhs, guys? 7. So is it taxable? Yes. But one can be exempt. Which one will you take? Will you take the 1 lakh? No, it will not give you a great benefit, guys. But take the 5 lakh one, because see, the higher the premium means the bigger the sum assured. Yes. So that, be the smart guy. In that 5 lakh, whichever is exempt, that's your choice. Everyone okay with this? All right. So we move now ahead to some new things here. Something very, very new is happening, but I'll take first some easy ones. Guys, in the state of Karnataka, if girls travel by bus, free, guys. I don't know what to say, but guys are feeling bad about this. Yes, but there is a rule in the state of Karnataka. Now, why did they do this? Yes, guys, somewhere to help also women, somewhere to vote bank also. Same thing, guys, in the state of Sikkim. Which state, guys? Sikkim. The government decided that I want votes from this state, so I'm going to do some exemptions there, and they exempted two income. Any income for individuals only. Any income from within Sikkim. So if you have any income, if you're an individual within Sikkim, which is exempt, plus interest and dividend, from across India is exempt. Only if you are which individual? Sikkimis. Yes, not for companies, etc. And this exemption is given under a section called 1026 AAA. This is only for which people, guys? Sikkim. I said, how do you become a Sikkimese individuals, guys? What kind of eyes should you have to become a Sikkimese individual? No. Yeah, nothing like that, guys. You can't even marry someone and become a Sikkimese individuals. No. It's basically only if your legacy from Sikkim. There are many conditions. Don't have to go into that. In the exam, if there is a Sikkimese individuals or earning income, is it exempt? Section 1026 AAA. Now, guys, I'm talking about two, three simple ones and then the important ones. Yes. Uh, yes. So, are you a Sikkimese individual? Yes. Then the income from within Sikkim, if you're getting some income, exempt, and interest and dividend also across India exempt. If you're a Sikkimese individual. Yes. Good question. All right. Guys, the next one again, take a very simple one. Everyone, guys, pension. What is pension? When you retire, what do you call pension? Is pension taxable? Think about it. Is pension taxable? Yes, good. Most of you guys know it already, guys. Pension is, I have a shortcut called PT. What is PT? Pension is taxable. A lot of people have a myth that pension is exempt. No, no, it's not exempt. Your grandfather got a pension. He was not paying tax because of his basic exemption. But is it taxable? Yes. Now, guys, there are two people whose pension be exempted. Hear me out. Watch out very carefully. Guys, there is a person who won some gallantry award, guys. Which award? Gallantry basically means bravery award. Which award, guys? Bravery award. Did you win a bravery award? Yes, everyone. Did you win a bravery award? The government says such kind of people, when they get pension, that pension will be exempt. Not the award. Award is already exempt. Under which section? 1078. This is a gallantry award winner when he gets what, guys? Pension. Everyone okay? Guys, your pension, my pension, taxable. But only if you win which award? Then the pension will be exempt. And second, guys, a soldier. Guys, who is this? Soldier in army, navy, air force. Has he lost his life unfortunately on duty, or he's become disabled on duty, guys? What has he happened? Disabled, guys. Everyone, who is this person? Soldier, guys. Has he lost his life on duty, or has he become disabled on duty? Then the government says, I'm sorry about it. So if you get your pension, or if your family gets a pension, that pension also on humanitarian grounds. Are we okay with this, guys? Yes. Plugging the section, this is 1018. and this is 1090. Can we repeat the three? Guys, Sikkim, 1026 AAA, 1018 Gallantry Award winner, their pension, and 1019 military people, their pension. But only when military people have lost their job. Guys, you're a military people person, not lost your job, not lost your life, etc. Then your pension is taxable. Are we okay with this? So as a general rule, PT, pension is taxable. That's a general. Okay, moving ahead to the next one. Now, guys, going to slightly tricky ones. Be with me. Very, very important, but slightly tricky. Yes. Guys, government people have something called what, guys? Pension. This is for people who work for the government. Private employees have something called provident fund, guys. Which account? PF account. Guys, everyone, let's understand what is pension, what is PF account, guys. When you work, some part of your money is taken and put in a separate account and is paid to you when you retire. Private employees, provident fund. Government employees, pension. Guys, are they both different? Yes. But the purpose is the same, to help you in retirement. So the government, guys, decided that we want a common scheme for everyone. So they introduced a scheme called National Pension Scheme. Everyone, which scheme is this, guys? National Pension Scheme. And they made this scheme at CCD, guys. Where did they make it? CCD. We'll know why CCD later, but right now it's National Pension Scheme. Let's try and understand. Guys, very important. At CA final stage, these things like NPS, etc., are very, very important. Understand it. It's your one opportunity right now to understand it. NPS account is like a bank account. It's like what? In bank account, can you put money? Yes. Can your employer put money? On that money, what do you earn? Interest. And can you withdraw that money? Yes. Same way, guys, in an NPS account, guys, who can put in money? Master means employer. Who else can put money, guys? Slave. Slave means employee. On that, what do you earn, guys? Interest. And finally, can you withdraw this money? Yes. So, guys, people who think NPS is a different account, no, guys, it's like a bank account. But you can't GPay from it. It's supposed to be received by you after retirement, etc. Now, guys, let's say you have an NPS account. Everyone, I'm putting some numbers. Over the period of time, 10, 15, 20 years, the master put 10 lakh rupees. How much, guys? Whose contribution is this? Master's contribution. Guys, you yourself also contributed 10 lakh rupees. So total how many lakhs, guys? 20 lakh. And that on that, guys, you earned interest of 5 lakh rupees. So please, can you total up and tell me the final total? How much is that? 25 lakh rupees. This is in which account, guys? NPS account. Now, guys, should you withdraw it every day? Government says this money is for your retirement. Don't withdraw. But guys, you want to buy a car which is worth 20. So you withdraw the money, guys, in between the scheme. In what? Between. The scheme is not over. You're not retired, but still in between, guys. Who's upset with you? They said, listen, this money is for retirement. You're withdrawing it before. So they say that, listen, how much are you withdrawing? 25 lakh. This will be completely taxable. But you say, government, this should not be the case. Some exemption you give me. You say you withdraw it in between. In between. So we'll give you a very low exemption of 25%. How much percent? Or whatever you have contributed. How much did you contribute? 10 lakh, 25%. Only 2 lakh 50 will be exempt. Guys, why such a low exemption? Because you withdrew the money in between. Everyone. Please tell me. First, whose contribution? Masters. Second, slaves. On that, interest. And then you withdraw. How many you withdraw, guys? 25 lakh. Is it in between you withdraw? Who's upset? They give you a very low exemption of how much percent? Just 25% of which exemption? Your contribution. Are we okay? But guys, you were patient and you let the NPS period get over, or you were retiring and then you withdrew this 25 lakh. Who's happy? Government. So government said this is after. This is what? Before, this is after. Everyone, more shortcuts. This is before, this is after. Who's happy now? Government says again this will be taxable, but I'll give you a huge exemption of how much? 60% of not your contribution. Overall amount. Guys, if the overall amount is, let's say, 30 lakh, 60% of this, 40 lakh, 60%. So now what is the overall amount? Is 25 lakh. Please do 25 lakh into 60%. 15 lakh will be completely what, guys? Can we repeat, everyone, dividing the class between and after? Guys, where is the bigger exemption? After. How much percent? 60% of total. And where is the smaller exemption? 25. Yes. Why? Because if you remove before, the government is upset. So only 25% of your contribution. Now adding the section, guys. This is before. So section is 1012B. Right? What is the section? 1012B. B for before. And this is section 1012A. A for what, guys? After. Are we okay with this, guys? Guys, how do you contribute? What happens with that interest? All that we'll see later. Right now, I'm talking about the withdrawal. Can we recap? Yes. 1 minute. Section 1012A. After 1012B. After how much exemption? 60% of total. And B, 25% of your. So every time you withdraw, you will get an exemption, but only of the 25% of your contribution. Yes. So partial withdrawal also, let's say out of this 25 lakh, you wanted not to buy a car, but to buy a bike for 3 lakh. So if you withdraw 3 lakh, you will get an exemption of 25% of your contribution. How much was your contribution? 10 lakh. So 25% of that is 2.5. So out of 3 lakh, 2.5 lakh will be exempt. So first, whatever you withdraw, you add, and then you get an exemption. So the smarter people will do what, they will only withdraw up to 25%. So if you withdraw up to 25%, it will be exempt. All right. Yep. No, it's aggregate. So now let's say you withdraw 3 lakh. So from 3 lakh, how much will you minus? 25, let's say 2.5 lakh. So you'll be taxed only on 50. But the next bike you buy and again you withdraw 3 lakh, then you've exhausted 2.5 lakh exemption. So that is basically the limit which is exhausted. So let's say the contribution amount changes from 10 lakh to 12 lakh. You have a calculator? Yeah. For anyone, guys, 12 lakh into 25%. How much is that? 12 lakh into 25%. 3 lakh. Out of 3 lakh, you've already taken exemption of 2.5. So now you next time you'll get an exemption only of 50,000. Getting it right? So aggregate exemption. Yeah. Yeah. So let's say the NPS period is coming to an end. You have 1 crore rupees your NPS. You'll obviously withdraw the entire 1 crore. Out of 1 crore, the government says 60% we won't tax. We'll tax only the balance 40%. And that too, we'll see ahead how to save that 40%. Yes. But if you withdraw after 60%, if you withdraw within 25, are we okay with this? Yes. 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 Yeah, on the total amount, but whatever exemption you've already taken, that will be minus. So in the end, let's say you have 1 crore rupees, you are withdrawing 1 crore rupees. Exemption will be 60% of 1 crore is how many lakh? 60, but 2.5 lakh you've already exempted. So that will always be minus. Good. It's great questions coming. If you understood, great. I'm just recapping. Whenever you withdraw NPS, first tax it, and then see if it's before 25% of your contribution, and if it's after 60% of your total. Are we okay with this, guys? Yes. All right. So this is 1012A and 1012B. We finished Gallantry Award winners. We finished Army military people. We finished Sikkim. Now we go to the next one. Guys, average age of marriage in India? 21? No, no. 21 is too early. It's 25. Yeah. It's growing. It's growing ahead, guys. People earlier, if you talk to your parents, my mom was married when she was 18. Yes, the day she got 18, she got married that day. So I think she was just waiting to turn 18. But now, guys, has the average age moved ahead? Yes. So now people have their child at the age of 32. At what age? 32. It's a small shortcut, guys, for people. If you have a minor child, guys, you know this already. I'm just recapping it. Guys, every income of your minor child will be taxed in your minor child's hands? No, in the hands of the parent. So, example, guys, today in my daughter's name, I made an FD, and her interest income is 1 lakh. How much is the interest income? Will she pay tax? No. It'll come to me, and when it comes to me, I get an exemption of 1,500 per child. Are we okay with this, guys? This exemption is under a section called 1032. Is how much? 1,500 per child. Guys, what if you have 2 children? What if you have 3 children? You will still get that. Guys, here there's no limit to the number of children. Yes, but small family, happy family. But there's no limit here. Yes, only the only limit is here. Yes. All right. So this is 1032. Now we go to the next one, which has been removed, guys. Everyone on the screen, the next one. If you speak to someone who is slightly older than you and you talk to them about dividend income, which income? Dividend. Your parents will say that earlier dividends used to be completely exempt. All you had to do is buy shares, wait patiently, earn dividend completely exempt. My father would only buy shares, I remember, which paid what? Dividend. Because dividends were fully exempt. And then came one finance minister who said that, listen, this is not right. Why are you earning exempt income? So they cancelled that party, guys. Earlier, there was a section called 1034. Which section? And their dividend was completely. Now, guys, this section has been removed. I'm just teaching you because some of you guys still have the knowledge because in your office, there's some person who's telling you, oh, dividend is exempt. Dividend is now taxable. Earlier, it used to be exempt. Everyone okay? Now, guys, a very, very recent change. In fact, this change happened during your year only, which is your year 24, 25. Something happened in between. Let's talk about it. Very, 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 very important. Guys, you have a share of Reliance, which right now, let's say, is for 1200. Guys, how much is the land share for? 1200. Do you buy it? Yes. At what price have you bought it? 1200. And Reliance is saying we'll do a buyback. We'll do a, and they are ready to buy it back for 2000 rupees. Every you bought a share today of 1200. Who's doing a buyback? Reliance for how many thousand? 2000. Now, guys, please tell me this buyback, guys. This is before. I'll tell you when the change. But this buyback, guys, if you offer this to buyback, guys, what is your income on this? 800 rupees, but the government said, listen, yeah, you relax, you don't pay any tax. It is exempt under section 1034A. Can we repeat? Very simple. You have a share of how many rupees? 1200. It is bought back for how many rupees? Please tell me layman terms, no tax involved, guys. As a businessman, tell me, are you making a profit? How much is the profit you're making? 800. Completely exempt in your hands under section 1034A. But if there is income, there will be tax. Only thing you're not paying the tax. Government told company that listen, you are the company Reliance, you will pay the tax. Guys, this is basically the company paying the tax. Are we okay with this, guys? Yes. So they made the company pay the tax. This tax was a flat tax of what rate? Plus flat surcharge of what percent? 12% plus HEC of how much percent? Who had to pay this, guys? Companies. Are we okay? This was the case up to 1st of October 2024. This is your year. In the middle of the year, they changed. So any buyback till 1st or before 1st October, guys, you are exempt. You are happy. Who's paying the tax? Now, guys, they killed this section also, and they said that if the buyback happens on after which date, 1st October, then you tell me, guys, now who's making this 800? Shareholder. The shareholder will pay the tax. So now companies, because there will only be one tax, guys. So earlier, who was paying the tax? Now they paid. Who's earning the money, guys? Because anyways, it's illogical, no, guys. Who's earning this money? Shareholder. So who should pay the tax, guys? Shareholder. So now they made it logical. Can we divide the entire class? Before 1st October 2024 buyback, 800 rupees I am earning as a shareholder. I am exempt under which section? 1034A. And companies have to pay the tax. Yes. The tax rate and the section I'll teach you ahead. Right? But right now, the exemption form. But on or after 1st October buyback, right, is there exemption? So this very highly important from an example. Are you okay with this? So just recapping the section we've done after the break. Is 1026 AAA. Second. 1018 gallantry. 1019 soldier. 1012B before. 1012A after. Here how much percent? Here how much percent? 60%. Yes. And it's aggregate deduction, aggregate exemption. And we also saw a section called 1032, 1500, a section that is now removed, 1034, and a section which is there also and removed also, guys. In the middle they removed. Are we okay with this, guys? Alright. And we'll see how many more we can do, but I want to do the next one, which is fairly easy to understand. There is some amount you understood your inter also. Here is an urban culture. What is UAL? Guys, is this land valuable? Yes or no? Because which area? If you sell this land, right, let's say you bought this land for 1 crore. You bought this land for, now you're getting 5 crores because Bangalore, right? So will there be income? Will it be taxed? Yes, because which land? Urban. Guys, rural, I'm not even looking at. We're looking at urban cultural land. But guys, you don't want to sell this land. You don't want to. Everyone, I want more repetition, guys. If you sell this land, is it taxable? Yes. You never wanted to sell this land. You always dreamed that I will make a beautiful house on this land. But the government said, listen, yeah, I want to build a metro. In exactly where your land is, I want to build a metro station. So the government did something called compulsory acquisition. Guys, can the government do it? Yes. People who don't know compulsory acquisition, in national interest, the government can acquire whatever they want. But they don't throw you out, they pay you market value. So in compulsory acquisition, guys, how much did you buy this land for? 1 crore. They are paying you 5 crore rupees, guys. Is there income? Yes. How much is the income? 4 crore. The government says, sorry, there is income. But because who's acquiring it? Government. This will be completely exempt. Two things. It should be which land? And it should be compulsory. So I'm asking you a question. Urban land, I'm selling. Everyone. Urban agriculture land, I'm selling. But if the government is buying it, exempt. Be okay with this. only you have to prove two things, that this exemption is only for you and me. Who are you and me? And our family, this is HO. This is one condition. And in the last 2 years, in how many years, you should have used this land for which purpose? Because which land is this? Oh, can we repeat that, everyone? Guys, which land? Why are we not talking about REL? Actually, we don't ever talk about it. We only talk about UA. If UAL is sold by you, tax. You sell it, tax. But if it's acquired by the government, exempt, but two conditions. Only for you and me, individuals and HFs, and it should be used for what purpose? Agriculture purpose in the last 2 years. How do you prove it's used for agriculture purpose? Do you show some stories, Instagram stories of you plowing, etc.? No. How do you prove it? See, when you've done agriculture, you must have sold something, right? Agriculture produce. You have those receipts of the sales. Everyone okay? This is a section called section 1037. What is the section? And the end, I'll tell you the main one. This is not an important section, but keep in mind 1037. And the next and the last section, guys, I don't want to bombard with too many. So this is the next and the last section. Guys, um, when you buy a house, can you take a loan on it? Let's say you took a loan from HDFC Bank, guys. Every month, what do you pay? EMI. Who pays it? You pay to whom? Bank. Everyone. Now, guys, you already have a house. I'm reversing this. You already have what? House. Or you already have what? Land. Or you already have what? Office. It's yours. No bank loan. You went to HDFC Bank. HDFC Bank, I want to do a reverse mortgage. What do I want to do? Bank says, how do you know about it? You say, listen, I know it. Reverse mortgage. Yes. Reverse mortgage, what happens is you give your land, house, papers to the bank, and every month the bank pays you. In mortgage, you were paying the bank. Now who's paying, guys? So hear me out, guys. Do you have a house or a land or an office? Whom do you give it to? Bank. The papers only. And every month the bank will pay you some money. Example, the bank pays you 1 lakh every month. In a year, 12 lakh. In 10 years, 1.2 crores. Who gave you the money? Now it's time to repay. So how much did the bank pay you? Plus 30 lakh interest. So bank wants how much back? 1.5 crores. Either you pay the bank back or the bank will sell the house. Called reverse mortgage. Guys, repeating everyone. In mortgage, who pays who? People pay the bank. But this is reverse mortgage. Who's paying? Bank is paying you every month. Every month they're paying you your money in your bank. Or enjoy it. But after a few years, you have to repay it. If you don't repay, house will be sold. Guys, I'm not talking about anything except every month that you get 1 lakh rupees. Is this your income or is it a liability? It's a loan. You have to pay it back. And hence, guys, any amount received in reverse mortgage scheme. What is RMS? Reverse mortgage scheme. How much money did you receive every month? This is completely exempt because it's not your income. It is a liability. Guys, 1 minute. If I give you 5 lakh today to give it to me back tomorrow, guys, is that your income? It's a liability. Yes. There's a section called section 1043. What is the section, guys? 1043. That's it. There are a few more, but I don't want to bombard it today right now, guys. The last few we'll discuss, guys. Sikkim. Forget the section. Do you understand Sikkim? Yes. Gallantry award pension. Army Navy people pension. Yes. Minor child. 1,500. Dividend is now taxable. Buyback. Both. It was exempt and now it is taxable. When it was exempt, who was paying the tax? And now you have to supposed to pay the tax. Yes. And if it's an urban agriculture land, you sell it. Government buys it. Exempt. But agricultural purpose and all that, and reverse mortgage is completely exempt because it's not an income. It is a. I have about 5, 7 exemptions more, but I don't want to push it honestly today. We'll write this today. When we come back tomorrow, we'll do those 5 because I don't want to miss out on the case laws. Yes, because I don't want to lose that hang of it. Every day we come and do 3, 4 case laws. So we'll write these last few exemptions. We'll end exemptions and then we do case laws, and that's where we end the session. Let's start writing, everyone. Can you tell me the last one you've written? Is which one? 1010D. 1012A shortcut is after. And another word for gallantry is what, right? So if you don't know gallantry word, try bravery in a shortcut called PT, guys. What is PT? Pension is taxable. Pension is usually taxable. Be exempt in case of gallantry award. Soldiers who lost victims individual to income. Not writing 1034, but you should just remember 1034. We'll write 1034A. Stop. Shareholder table. Four lines. Shareholder. So I have just like 10 minutes. We'll write the remaining ones 10:37, 10:43 tomorrow, and we'll understand the last 4, 5 exemptions. No problem at all. Just saving this till here. People are writing, just complete writing. So I want to discuss one, two small things with you guys before we also end. And we want to discuss the focus also. See, I want to do DT in a time frame that I want to do. Of course, if it exceeds a few hours, no problem at all. Yes, but in the aim of attempting to do it well, there are some chapters which are very very tiny and very small. Example, a chapter called Advanced Ruling. It's a chapter in ICI material only. It's for 12. It's a 12-page ICI material chapter. Now, I was thinking for chapters like this, which are very very tiny, very small, there are about 2 or 3 of them, or maximum 4 chapters like this. If instead of doing them here in class, I will do a recording on my own, share it with you guys. You can watch it during your class duration only. That is this month, next month, you can watch it, and we can discuss anything that is here. Yes, not trying to shortchange here, guys, but all the time that we spend less on those chapters, we can do the sums here in class. We can look at more exam papers, RTPs, MTPs, as compared to doing a chapter which is slightly theoretical and which you can, on fast forward mode, you can do it at home in like half an hour, 45 minutes. Yes, so that's the aim. Not many chapters, guys. I think there will be maximum 3 or 4 chapters like that. If time permits to do it in class, I'll play the recording in class only and we'll watch it. But if time does not permit, I'll just send you a message and listen, watch these at home, and very simple chapters. And it's not that I'll tell you to watch this after our class gets over. I'll tell you to watch it while our classes are going on in the evening, while you're traveling one evening, sit and watch that 1 hour recording. And next day we can always discuss about it also and we can solve questions. It'll help us collectively save some time. Yes. So that is what my attempt would be. We'll see how that goes, but that is something that I'm thinking about. All right, just saving this. We've written 5 pages today, which is good. At least from my angle, I've written 5 pages here. I'll save this. We'll continue an exempt income tomorrow for first half an hour, guys, and then we'll enter into a new chapter tomorrow. Guys, tomorrow will be a start of a new chapter, which either will be one of the big chapters or one small chapter. We'll see how it goes, but we'll start with the heads of income from tomorrow. All right. Now, guys, the case laws. Let's talk about the case laws. Yesterday's case laws first. We'll recap the three and then we'll move ahead, guys. Guys, first is Honda. Guys, is Honda technical? Yes, so they were paying which fees, guys? Technical fees. Next, guys, then there was someone called Male Anand Filter. Guys, did he filter his deposit? Yes. So he paid some security deposit which got forfeited. And next, guys, there was Saurashtra Cement, and cement is liquid, guys. He had paid some, he has got some liquidated damage, which was again a capital receipt. Now we'll talk about 4 more case laws for today, guys. Let's talk about it. Guys, very recent. This is highly, highly, highly probable in the exam because it's an amendment by Finance Act 2024. Yes. Half of this class here, you are renting your house property. You have one property you're renting out. When you rent out a property, which room will you be taxed? Income from house property. Everyone okay, guys? If you rent, let's say a house, where will it be taxed? Income from house property. But this second part here, guys, they're all businessmen. Their business is to buy properties, give them on rent. They have 4 shops in Jayanagar given on rent, 3 houses in Bangalore and Mumbai given on rent. Now, guys, for them, is it a business? So earlier they would be taxed under which head? PGBP. But the Finance Act 2024 came up with an amendment. First, I'll tell you the amendment and then I'll tell you the reason. They said if it's a house property given on rent, if it's a house property given on rent, then forget PGBP. It will only be taxed under income from house property. But sir, I have 4 houses given on rent. I'm doing a business on that. Still, you will be taxed under income from house property. Now the logic. In house property, if you remember, guys, there was a standard deduction of how many percent? 30%. So people would get deduction, but 30%. In business, guys, can I take any deduction? My telephone bill, deduction. Salary, deduction. So businessmen were basically telling the government that I'm taking hundreds of deductions. The government says sorry. So now, guys, there are 2, 3 case laws very, very important. One is called Chennai Properties. What is it called, guys? Chennai Properties. Guys, this is Chennai Properties. The same case law is also in a company called Rayala Corporation. Which corporation? Rayala Corporation. Now, what these both companies were doing, they were giving house properties on rent, and it was a business. It was their business. So they were earlier taxed under which head? Now, with the Finance Act Amendment of 2024, the court order or the court decision will be changed now because now it will be taxed only under which head, guys? So from today onwards, any client of yours in office says, listen, I have 40 properties in Bangalore, I'm giving on rent. Good. Will be taxed under IFH. If it's a house property, it will always be taxed under house property. This is a very recent amendment. As I'm predicting this for your exam in May. Because in May, this can be asked directly or indirectly. Somewhere, because now it's a decision, no, not of the court, but a Finance Act amendment. So this is one. Can we repeat which properties? Chennai properties or Ayala Corporation? How you remember, guys, that Chennai has the highest rental income. Chennai has highest rent. Everyone, Chennai rent. Can we remember this one, guys? Alright. Next, guys, when you pay fees for your class here, and now that you're attending class, guys, yesterday was day one, today is day two, guys. Are you a student here? Yes. Have you got your ID card? Oh, then how are you a student? ID card is a formality. ID card is a formality. Have you started attending classes? Have you paid your fees, etc.? Same way, guys. There was a case law called ICDS. What is the case law? There's a company called ICDS. Guys, remember the ID is a formality. Yes. So same way, guys. Here, I'll tell you what ICDS did. They took some machines on finance lease. Which lease? Finance lease. Finance lease basically means you're the owner. Only the name changes after a while, guys. So the registration of the machines were not in his name, but this company took a lot of machines. Were they using the machines? Yes. Were they owning the machines? Yes. So can they take depreciation? Yes. 1 minute. The shortcut called OP. Guys, what is it? Are you owning the machines? Yes. Not today, but will you eventually own the machines? Yes. And guys, are you putting it to use? Then can you claim depreciation? The assessing officer said, no, you can't. They went to court. They told the court, I'm owning the machines also and I'm putting them to, I deserve what? The court said, yes, you deserve what? Depreciation. Recapping, shortcut, ID. Company, ICDS. Was it a company which had taken some machines? Guys, on a finance lease. Which lease? So OP, were they owning the property also? And yes, they were putting it to use also. Just because the registration was not done in their name, still they would deserve what? Depreciation. Guys, can we repeat first one? Chennai properties. Any property rental will now go under IFHP. Even if the court said PGBP, now the court decision will have to be changed because Finance Act 2024. And next, ICDS said that I want what? Depreciation. Can they take depreciation? Yes, as long as they own the property and they put it to. But so they're not owning, no. It's finance lease. It's not operating lease. It is finance lease. Basically means you pay. At the end of the term, the asset will be yours. Are we okay with this, guys? Everyone. And let's take the last one. Is K and company. Shortest K. Okay, what is it? K. K for Kotak Bank. Everyone. K for which bank, guys? Kotak Bank. Now, very simple, guys. K and company was doing some business. Everyone, hear me out, guys. K and company was doing some business. Guys, so they had got some deposit. They had got some deposit which they kept in the bank. Hear me out very carefully. You're a businessman. While doing your business, you had taken some deposit from some customers and you had put it in the bank. And from the bank, you earn interest. Bank, you earn interest. Or for some reason connected to your business, guys, you earn some interest from the bank. Is that interest going to go to IFOS or PGB? That was the question. Can we repeat? Guys, did they make some deposit? With whom? Bank. And what were they earning? Interest. This deposit was not from their savings, etc. There was some deposit for a while, they had to keep it in the bank. Was it connected to their business? Yes. So the government says that this interest of KN company will go under which head, guys? PGB. But sir, interest always goes in IFOs. Yes. And if you save money and put it in the bank, that interest will go under IF. But this is not from the saving, etc. This is not from their amount. This is from some amount which they had collected in terms of business. For a while, it was kept in the bank, guys. It's connected to the business, hence it will go into which? BJP. Can we repeat the three? I'll take up questions first. Chennai properties. Chennai has a lot of rent. If you rent properties, it will go under. But sir, Chennai properties case law says PGBP. Yes, that case law will now not be mattering because now Finance Act 2024. Second case law, ICDS. ID. ID is just a formality. Are you a student? Yes. Have you paid the fees? Are you attending classes? You're a student. Same way, can you take depreciation without registration also? Yes. And last, KN company, Kotak Bank. Did you put some money in the bank? Guys, don't get me wrong. If I save money and I put it in the bank, it's IFOS. But if it's some money which is used for business or which is being used for business, etc., I need to pay it back. For a while, I had the money, I kept it in the bank. That is connected to what? Business. So it will be taken in which hand, right? BGP. Are we okay with it? We'll write. If you have any questions, we'll take them up after we end the class. Yes, but we'll write for now. It's 9:30 already, but we'll still write and finish. Right? Yes. These are some case laws. Did we write yesterday's case laws? Yes, all right. Continue the trend, guys. On the last page, I think you'll be writing case laws. Okay. Let's write today's very, very important case law, which is case law number 4. All right. Please write Chennai properties dash RAYAL. Chennai properties or Rayala Corporation. House property given on rent for business would be taxed However, for Finance Act 324 amendment, any income property, even if done as a business, be taxable. Very important, guys. Next time you file some return for a client, even if he says I'm doing it as a business, please tax it under which head? IHB. A and Co. A for Kotak Bank. Bank guarantee for business was obtained by making a deposit to the bank. So basically, as part of your business, you wanted a bank guarantee. For that, you made a deposit with the bank. Interest earned such deposit will be taxed by PGB. ICDS is very, very simple, guys. ID is a formality, a shortcut, very random shortcuts I'm making so that at least we have something to remember. Depreciation can be claimed on asset or finance lease, even though not registered in the name of the assessee. Can be claimed this owned to use the asset. That's asset. Is owned and put to use by the assessor. All right, guys. So this is where we end our session. For people who have to immediately leave for the office, guys, no problem. For the others, guys, we just take stock of what we've done today. We've done a lot of exempt incomes. Yes, so we'll recap that tomorrow. But we've done a lot of exempt incomes. Just checking, guys. Starting from agriculture, which is 10.1, we reached till reverse mortgage 10.43. We'll write a few tomorrow, and we'll also understand a few more tomorrow. Then we did scheme of partial integration. Guys, that applies when you have both agriculture income also and taxable income. We've not written it, but we'll write that in rates of taxes. And then we've also done three more case laws today, guys. One is Chennai properties, one is ICDS, and one is K and property. Yes. On that note, we finished the session. We've done six case laws already, and almost towards the end of chapter number 2. Tomorrow, this chapter will continue, and we'll start another chapter, which is chapter number 3. See you guys at 6:30. Thank you, and see you guys. Questions, if any, I can answer now. Yes. Yeah. Yeah. That is IFOs. But here I'll tell you what happened in the KN company. KN company wanted a bank guarantee. You understand what is a bank guarantee? For their business. Some business they wanted a bank guarantee. For example, I'm a builder. I'm building your building. All the residents said we want a bank guarantee. Okay. I went to the bank. I said I want a bank. Bank guarantees. Bank said I won't give you a guarantee just like that. Keep some money with me. So I kept some money with the bank so that give me a guarantee. This is all connected to business. Yes. Now when I earn interest on that deposit, my intention was never to deposit money. My intention was that bank guarantee. The interest is only a byproduct, and hence that is also yes. Otherwise, all interest and IFOs. Any money that you save, get as a deposit, you park that money in a bank, that interest is IFOs. Yeah, but it's not being. It's not. Um, I say it's something that is given to you for long term. It's almost like a money that you have with you. By the way, you are putting it in the bank. It's not connected to your core business. But this one was very closely connected to, and it's actually for these final points you go to the core. Otherwise, interest generally IFOs. Yes. Yeah. Pension is generally given by government companies only. It's exempt. Even anyone giving a pension, it will be exempt for those people. Yes. Yeah. When you deposit money in an NPS account, it's allowed as a reduction. Yes. Under a section called 80 CCD, we'll see ahead. Yes. So that will not be taxed again. Not be taxed because yeah, the general income is taxed once, it will not be taxed again. So in your NPS account, if the amount is taxed, you will not be taxed. On the balance only, there will be tax, the 60%. Exactly. But see, NPS, if you have a job, you can contribute. But if today I don't have a job, still I can make an NPS from my account. So it's not just it's self contribution. Yes. We'll come to PPF also, the exemption, but we'll done in a separate part. So some exemptions covered is some in different chapters. If any details, no, you have some numbers put, we can always discuss with numbers also. Think at office, put some numbers, and we can always discuss. I'll show you. 2 minutes. Huh? You're here for 2 minutes? Okay. You can study here also. You can hang around here also. Oh, oh yeah. Unfortunate. Yeah. I understand. No, usually there used to be always one room, but now I think all classes are busy. Yes. So basically, what they'll do is in the question only they'll give you the full scenario. So you have to replicate the scenario and then explain it with quoting the statement. We'll see when we I'm making you remember it. Once we do etc. Then when we solve some, we'll also quote it. Mainly, it's quoting the name. Most places you don't have to explain. They will never say Ryla Corporation. They will only say that house property on where will they house property and you write as per this. There is a year also. There is a number also of the case. All that, see, it's not possible only. Even if you today think that, oh, I'll remember it, will you be able to remember? I don't think so. That's a battle which I give away first only. And remember the name because name and concept, that is important. Yeah, I want to show you that part of your ICA material. Jata Sharma, Dolly, Mali. You can take a photo there. Read it. It's basically exactly talking about what you want. After seeing this, but I would like to know how to make my approach next time because I went through Hindu Marriage Act, Hindu Minority Guardianship Act,
Oh no,
Succession
no, no.
Act,
So this
all
is
those things I went
I
for the
understand.
definition per se.
Which software are you using? You have access to Tax Sutra.
Okay. Tax.
Tax Sutra, it's a paid thing, but where you put all the words, keywords, and it'll hunt for case laws for you. So those kind of softwares help.
I went through a couple
Yeah.
of case
One second.
reports.
You went through the search. Otherwise, it's a nightmare.
Yeah.
This is basically because I saw it here, and otherwise, what we do in a firm, any firm, we hunt through Tax Sutra, or we have subscription to all these. We hunt there, and then they figure it.
Definition.
Definitions also. But if you have a case law, that supersedes all of that.
I this one is probably that came and they made an amendment that I not get to know.
No, because this is an amended ICI material. So
No,
the
this is
relevant.
okay, sir.
Yeah.
But even also,
Yeah.
I don't know if they have amended after.
Oh, so the
that
case
is
law commentary, they have a mention. Like Chennai properties, that you now finance act process your tax. They have a commentary down. They always mention. All right, hard work. Thanks tomorrow. So I'll just change it here only, so it's for records.